very interesting webinar on market profile, which will be looking at concepts and microvisual structures. And today's our guest, honorable guest, is Mr. Rajandran. He is renowned in India and Asia for market profile. He's a direct disciple of the legend Jim Dalton. He is also the mind behind open source trading framework, which we will be talking about later during the webinar. He has more than a decade of market profile experience and 15 plus years he has been trading. He trades the most liquid stocks, Bank Nifty. I think he also dabbles sometimes in ES and NQ, which we will discuss. He has been a system designer, writer, mentor. He has published many open source codes for trading software for AMI Broker as well for TradingView. He is very passionate about understanding the market context and market generated information. And he's a systems trader. We are so honored that we have a trading visionary with us. Mr. Rajendran, welcome to this very interesting webinar. Over to you, sir.
Thank you, Nalin. Thank you for inviting me to talk in your forum. That's an honor to me to talk in this wonderful session. So, as I said, today's talk is all about market profile concepts and the micro visual structures.
Sure.
So one of the most disappointing thing, right? So it's nothing but the market profile and order flow kind of tools has a very limited resources and it has a far reach from the regular retail traders. And many retail traders sadly see this as an yet another tool. I think maybe this session could change the perception. So that's what the ultimate idea behind that. And a little bit about me, as Nalin had already said that I'm a system trader and also a discretionary trader, but still a pure visual rule-based trader. And I've been using market profile and order flow since 2012 onwards. I'm also the creator of OpenAlgo. So it's an open source algo trading platform, particularly for traders who want to do systematic trading. And I'm also the author of marketcalls.in. I've been writing in market calls since 2006 onwards. Primarily, I write about trading strategies, trading softwares. I many times post open source trading models. Close to close, I had posted 100 plus trading systems on AMI Broker, Python, TradingView. And since 2012 onwards, my addiction shifted not only towards system trading, but majorly towards market profile and order flow. So since then, I had written a lot of articles on market profile and order flow. And if you ask me what is market profile?
So at this point, I just wanted to understand what prompted you to pick up market profile? Because in 2015, means 10, 12 years, people didn't even know about what is a market profile. How did you stumbled upon it and what made you move towards it?
So, as I said, I'm a system trader. So back then I used to work as a telecom my profession is mostly into telecom. So I worked as a 3G, 4G network configuration engineer. And one of my friend, he talked about, so you should explore market profile. But I was searching mostly for, like every other trader, I was searching for an edge. I was searching for a better entry points, exit points. So that is where I stumbled across market profile. Only my one of my friend recommended me that you should learn market profile and order flow. It is where you can fine tune your existing strategies. So I thought like I could try to fine tune my existing systems. So that is the reason I started learning market profile. But initially, I'm not able to get anything like every other regular trader. Market profile seems to be like kind of Greek and Latin to me. I had to fight. Many times I had to give up. Again, I had to fight. I had to give up. Very limited resources from YouTube there. So I have to go and stumble upon a couple of, there are nice Indian mentors. They posted, a couple of Indian mentors, they posted about the basics of market profile. And finally, I got stumbled into Jim Dalton's videos. And then I have to go through repeatedly, I had to go through his every video. Even now, the video has been available in the internet. Almost every video goes through like 1 hour or 2 hours.
Yeah.
Ample amount of information I'm able to grab from the videos. And luckily, I had a chance to meet Jim Dalton face to face as well.
Right.
I also had a chance to learn from him one of his session,
Hmm.
not a
Okay.
complete session, but I think I would say like some 7 days or 10 days of session he conducted online. I had a chance to attend his session as well. So the face-to-face interaction, what I got. So I was
Hmm.
invited in a forum to talk about systematic trading, and Jim Dalton also uh, spoken in the same forum. So he talked about market profile. So fantastic learning I got. Probably I
Agreed.
would say like that is around 2015, 16. That
Okay.
is a place where I would say like I got a real perspective about how we should look into the market profile.
This was in Thailand. I remember
Yeah,
you
this
had
is in
posted a
Thailand, Bangkok. Yes.
somebody created a picture made out of the TPO blocks for him, right?
Yeah, I have that. Maybe I could share. Uh,
Yeah. Yeah.
so it
And
was
meanwhile,
Dalton's,
just responding to a question answer, this will be recorded and we will be posting the video in the next few days on the YouTube channel. So this is responding to a question. Thanks.
yeah. So this is like some of the information we collected from Jim Dalton's speech, and
Right.
one of my friend Rishi
Hmm.
Umrania. So back then he was a market profile trader, but now he moved to like Netflix kind of.
Okay.
So I think it's a pretty old article, but so
Yeah,
this
I
is
read this article and it was very interesting
picture, I
actually.
believe. This is a profile picture completely made up of TPOs, right?
Oh,
So
wow. Beautiful.
the entire picture is made up of numbers, letters, A, B, C, D. So it's a
Very
gift
nice.
they had provided, and I
Yeah.
think this is me with Jim Dalton. I mean, this is like almost a decade old now.
Yeah. It's good to have these anecdotes. It makes the learning even more interesting actually, because
Yeah.
it just shows how much people enjoy the learning part so that they are able to pick something up like this and make it the TPO into a photograph of Mr. Jim Dalton.
Yes, yes, exactly.
Very nice.
Some of my photo is not coming in. Oh, yeah, that's
It
me.
came. Yeah, yeah. Nice. Smart. Very smart pick.
Yeah. But that's a fantastic learning experience which I got from Jim
Indeed.
Dalton. Yeah.
So like you said, the market profile tool has been made to sound very esoteric and very somehow this tool has been kept outside the normal retail, and this is our effort through
It's
FTU
not kept
trading.
outside. I would say like it's not kept outside. So market profile, right? It requires a little bit of screen time experience,
Absolutely,
and it
absolutely.
also requires some sort of self practice, dedicated practice. It's like kind of you go to the gym and then you build your muscles not on day one, not on day two, but you have to go to the gym on a daily basis. So some sort of a continuous effort is something similar effort is what it is required over here.
Right, right.
So, how many of us like went to the gym and then give up on the first
Day
month,
one,
week? Some people even day one.
absolutely.
So, right. So, something
Actually,
similar to that is what market profile is
absolutely.
all about. Simple concept, but it requires dedicated practice because a lot of
Right,
nuances are there.
right. So let's jump into the market profile part. Thanks, Rajandran, for this very interesting anecdotes.
Yeah. So, market profile, I would say like it is not just an indicator. It is more of a visual tool to understand what the buyers and sellers are trying to do in the markets. So more than that, I would say like what kind of traders and what kind of buyers and sellers are interactive in the markets. Sometimes we might be able to see some smart traders coming and trading in the markets. Sometimes we will be able to see weaker hands. So I would say like market profile is one of the tool which can tell you what stronger hands are doing and what weaker hands are also trying to do in the markets. Right. So that is where the microstructure comes into the picture. So later on, we'll talk about that. Usually, market profile is visualized in the form of TPOs. TPOs means time, price, and opportunity. So it's kind of a 360-degree overview it gives in terms of price and time and opportunity, which is nothing but volume. So in a single picture, it shows the multiple dimensions of information in a single picture over here. So price, time, and
Mhm.
volume. So market profile, one thing you can very clearly see that almost if you could have seen every day we see something called price distribution. So here when you're watching market profile as a beginner, two things you have to focus on: price action combined with price distribution, right? So it is majority of the time market profile is nothing but visualizing the price in the form of price distribution. So we visualize the price in the form of letters, right? So you'll be seeing a lot of letters. Letter A to letter M is what you'll be seeing. Every half an hour, a letter will get generated. And every day, I'll be getting a structure like this. If you could see the structure will be forming a bell curve shaped structure. This is a one particular day structure.
Right.
Likewise, every day we'll be getting different structure, and this structure helps positional traders and intraday traders to make trading decisions. And during the live markets, we'll be seeing how the structure is evolving over a period of time. The more you are having an experience in watching this price distribution, you will get to know more about the repeated trading behavior, how traders visually they come and trade, how they trade something called exactness, right? So later on, I'll talk about the concept of exactness. What does it really means? Because that is a fundamental part behind tracking the smart money as well as the weaker money as well.
So if we can define what is smart money and weak money at this point of time, because in the group we have a very varied range of members, Rajendran,
Yes.
from very experienced to very novice. So the idea is to get everybody involved and get them on the same page.
See,
So one is, yeah, sure.
I have a complete different picture about what a smart money and what a dumb money is all about. So the common view is like smart money means institutions. Dumb money means they are like small retail traders.
Okay.
That is what the generic view. But if you ask me, smart money, who is smart money? If you ask me, many people agree that Warren Buffett is smart money, right? Many people agree that the late Rakesh Jhunjhunwala is smart money. And many people agree that Ramesh Damani is smart money. But the question here is, are they smart money in my time frame? I'm an intraday trader. If today Warren Buffett is buying, or today if Ramesh Damani or any other big institution is coming and buying, doesn't mean like they become a smart money in my time frame, because I'm an intraday trader. So what I will anticipate, if I'm an intraday trader, I'm a positional trader. If I'm trying to spot smart money, I will expect that price to move immediately in that favor.
Okay.
Right. So Rakesh Damani could be smart money. Rakesh Jhunjhunwala could be smart money, but they might be smart money for the next 6 months or a period of time only. Their smartness will be reflected, not necessarily on the intraday itself.
Right. So in fact, their smartness is there. They are able to absorb a lot of stocks without moving the money, without moving the price action. So that is where their smartness lies in many ways actually.
No, I'm not talking about that. In my terms, if price is moving in my favor, I'm able to spot the smart money, and I'm able to spot today itself, and that level is holding and price is moving in my favor. That is where I call that as a smart money.
So basically,
that smart money could be institutional investors. That smart money could be big retail traders. That smart money could be big prop traders also. It could be anybody, but ideally some big funds are involved over there. But they are ideally traders. In my time.
So for an intraday trader, any smart money is that which can make the price move.
Yes. Right. So smart money is where who comes and defends the price level exactly at a certain level.
Okay.
And they defend the price action, and they are smart money 75% of the time. I will not say like completely they are smart money, but 75% of the time you can sense the smartness in their price action. Visually, we will be able to track it from the market profile.
So let's take it as the session goes. And second thing is, when we talked about this profile, so in the normal candles, what we see is price is spread on the x-axis over time. But over here, the price is like turn 90 degrees on the y-axis. So how do you differentiate a TPO and a candle chart? And what sort of advantages you see with a TPO chart over candle chart, Rajendran?
See, candle charts are definitely useful. I will not say like I will not ignore. Once in a while, I'll look into that. But over a period of time, I got trained to my eyes got trained to market profile. So without candlestick also, I can manage. So most likely I'll also still look into the candlestick charts. I'll also look into some indicators, but not during live markets. But some of the additional add-on tools, I use indicators as an add-on tools, right? So I use Generally, people say like market profile is a supportive tool, but I'll say like market profile is one of my primary tool, and I use other indicators as a primary supportive tool along with that, so that it assists me in having a better view, better clarity in my thinking, whether my thinking is right or not. To assist that, I'll add extra indicators along with that. But primary
Absolutely.
tool is always the market profile for me. Right from the start till the end. Maybe once in a while, I'll go and look into the candlestick charts if I want to look into that. But otherwise, without looking into candlestick charts also, maybe beginners may find it little difficult. I've seen many beginners, they initially feel it little difficult, but once they get the gist of market profile, I'll not say they'll be hating indicators. What they will be getting is like they will be getting a new dimension to their learning. They will get it by start observing market profile. Initially, it's okay. You see market profile also, you see candlesticks also. But over a period of time, you yourself will discover that market profile will give you more nuances than a traditional candlestick charts.
Absolutely. I completely agree with this.
Yeah. So you're asking something like you said like something about the balance and vertical 90-degree. What is that?
No. What I was asking is normally we see most of us are used to seeing the candle chart where we see that the price is spread over time, which is on the x-axis.
Yes.
But over here, the price is reflected on the y-axis, and the time is also, squished together on the y-axis like a in terms of a bell-shaped profile.
Yeah, that's a nice question, but not necessarily. Instead of candlestick charts, what I will do is like we can split the profile and we can see like similar to a candlestick chart structure. So here, let's say I'll go to a specific profile, I'll zoom to a point, and I'm using NinjaTrader 8. So if I right click and then split a particular day's price action, I'll be able to see the price action over here. So how the price action has been happening on that
Right.
particular. So instead of candlesticks, generally in candlestick charts, we'll be bothering about where the open, high, wicks and everything. But here I don't bother about where it opened, where it closed, whether it's creating a tail or not. I'll be looking at a structural level. So most likely, I'll not just look only into the price action. Of course, I can look into the price action here. I can see here, right, that particular day on 16th of July. This is Nifty future charts. So I can clearly see that the price keeps going higher in the first half an hour. That is letter A. So price opened, it went down and it's able to get back up. B period,
Right.
it started from 9:45 to 10:45. Again, it went a little bit down, again got back up. C period went back up and D period went back up. E also went back up. And then later on, market started crashing down and finally it got settled down over here. I'm also able to see the price action also along with market profile. See, market profile is not only price distribution alone, it is also price combined with the price distribution always. So price action combined with price distribution. That is how we have to see market profile. So many people think only price distribution. So I'll not be able to get many important information. What I can do as an intraday trader, what I can do as a positional trader, but a lot of meaningful ideas we can get. The only thing is like we have to start focusing very closely with the market profile. You'll be getting a lot of interesting nuances from there.
So in simple words, how will we explain what is a price distribution, Rajandran?
So price distribution is like, let's say, I'll try to give a simple example over here.
Right.
What market does is like market never moves in a straight line. Market, you would have seen that market moves like this. Probably last Friday market had moved, price opened and then it kept on going down till the end. But if you see almost 70% of the time, market rotates around the center point. So it goes up, comes back down, again goes up, comes back down, again goes back up. A particular level would have been kept on repeatedly touched multiple times. So there are days like every half an hour once, it would have been touching like 10 times in a day, or sometimes even 13 times in a day. The letter total A to letter M. These are like total 13 letters in a day will get generated right from morning 9:15 to 3:30, letter A to M. So a particular level will be repeatedly touched again and again and again. And that is what a process called price discovery. Because of that reason, institutions, they do exist in the markets. So if you are really curious about what is a price discovery, you just search about NSE India price discovery. So because of the price discovery, institutions, they trade in every markets because they want to have a fair value for that day where they can do more business. So here, if you could see, I can count the number of TPOs. Each and every TPO, if I count horizontally, I'll be able to see like A, B, C, and then G, I, J, K, L, and M. If I count the number of TPOs horizontally, I'll be able to see how many times a particular level got revisited. So if you could see like 4, 5, 6, 7, 8, 9, almost 9 times, I'm able to see that the center point is repeatedly getting touched. So why
So
it is
nine
touching?
out of 9 out of 13
9
periods,
out
the
of 13 letters.
price.
Yes, 9
Yeah.
out of 13
So
letters. So
yeah.
imagine
So
I'm an intraday trader, how this information could be useful. If I'm an
right.
intraday trader, I know that the market, a particular level is likely to be revisiting. So I'll be looking for a place where market is likely to, that's what we call as a balancing, where market
Mhm.
will be like, keep on moving up and down around that region. So a center point will be formed and market will be keep moving like that. Or sometimes
So
it
on
goes away and then it gives an opportunity to trade towards the center sometimes it goes deviated away from that and then it gives an opportunity to trade towards the center. This happens 70% of the time in the markets.
so on such days, mean reversion strategies, if you fade extremes, are very, very useful.
Yes, if you are a market profile trader, many times you may have to learn to trade mean reversion strategies, a trend reversal
Mhm.
strategy, because that is what it happens in the markets. And very
Right.
few instances where you should also be able to see the strength, because momentum is also something very important. A trader should not misjudge an momentum, because trying to trade against the momentum, even though it happens very little amount of time, the
Mhm.
damage will be very heavy if you start trading against the momentum.
Right. Right. So
So
we'll come to that aspect of how to understand the momentum, but just taking a few questions also over here because so since Indian markets they run for 6 hour 15 minutes,
yes.
why is it that 30 minutes is used like unlike other markets where the time is much longer, the markets are running. Why not 15 minutes or 25 minutes? Is there any
Yeah,
sort of
that's the
a
exact same question I also asked Jim Dalton when I met him, because I also have
okay?
that curiosity. I also experimented like 15-minute, every 15-minute letters. I just started generating hourly or daily, weekly profile. So for those people, I'm going to explain what Jim Dalton had said to me. So Jim said like, even if you go to change to the 15-minute time frame,
Mhm.
the structure will remain the same. So it's a software
Oh.
information. You just, let's say, like I'll just show you, nothing is going to change. The structure still remains the same. Maybe you will get more granularity. But what
Mhm.
he said is like, I don't want to see too more of information which creates analysis paralysis. I don't want too less of an information. I want an optimal information. That optimal information I'm able to find in the 30-minute time frame.
Okay.
Otherwise, if I go to the indicators, let's say I go and change instead of 30 minutes, I just change it to 15 minutes or hourly. It doesn't matter. The
Mhm.
structure will remain the same. The
Okay.
overall distribution will not change. Nothing will change. Point of control will remain the same. Value area will remain the same. Everything remains the same here. So, okay, in Bell TPO, it is different. So you have to change the, from 30 minute, I'm just changing to 15 minute. So that
Yeah.
every 15 minute, the letters will get generated. So different
Mhm.
softwares, they use different mechanisms. So if you could see that, even it's a
Oh
trend
yeah.
day over here, structure remains the same. It's an elongated structure. Whereas if
Mhm.
you go back and see the other structures, you will get almost the distribution will be remains the same thing. This is like distribution from 16th July.
July.
Only thing is
Right.
like you'll get a lot of letters, which is
Right.
very difficult to interpret. Instead of you getting 13 letters, which is very easy to read, now I should read 26 letters in a day, right? Which
Okay.
is very difficult. Rather, I would see a candlestick chart itself.
Okay.
So
Yeah.
whereas
Sure. Sure.
here,
Sure.
yeah, so whereas
Yeah.
here I have a very limited structure, same structure, but very crisp information.
Okay. Yeah. Thanks. Thanks, Rajandran. Yeah. Let's please go with the flow. We just went into an interesting question answer. So please go with the
Yeah,
flow.
fine. So the TPOs are nothing but the letters. We call it as a time price opportunity. That's a basic foundation of market profile, like how a human body is made up of cells. The market profile is made up of TPOs, a bunch of letters. Every day put together, it forms a price distribution. So ideally, there are two important concepts over here. One is point of control and value area. So the point of control is nothing but the center point. It's not exactly necessarily a center point, but that is a point where more number of TPOs are getting traded at the center point. Maybe to understand this, I'll try to show you a bunch of distribution structures. So these are like some recent distribution structures. You can see that almost, this is from 15th July. You can see almost 9 letters, I think, here. And then one day before I go, you'll be able to see like again some 8 letters, 8 times every half an hour, almost 8 times the price got traded around that center point. And then even before, if you go, even if it is a trending day, you could see like the market will be having a clean distributed structure with very wild fluctuations. So here I'm seeing like 7 TPO at the center point, minimum 7 TPO. You'll be seeing at least 75 to 80% of the time, a minimum of 7 TPO you'll be able to see. So only if the number of TPO is very lesser, that is what it happens on last Friday. So if you last Friday, if you could see the structure, there is not much of a distribution at all. That's a very rare day. Typically a strong trending day when bigger institutions are coming and selling, long-term players, big institutions like JP Morgan, Goldman Sachs, or Edelweiss kind of big funds, Kotak Mahindra kind of funds. So when big mutual funds are coming and selling, or big FIs are coming and selling, you might be seeing this elongated structure where you will be seeing little balancing. So if you could see that, like hardly like 6 TPOs is what I'm seeing, 6 TPOs, 5 TPOs, 4 TPOs. If you are seeing that kind of structure, that means that market that particular day has been aggressively controlled by the long-term players, right? So long-term players also, we can able to see from the profile structure whenever the profile is very much elongated. You can see the presence of long-term players. Otherwise, long-term players, they don't showcase themselves in the markets, right? So they are very conservative people. They don't want to express themselves on a daily basis. On a daily basis, they'll be either slowly accumulating or slowly distributing. Maybe once in a month or twice in a month, you can see the presence of the long-term players. So that is why I don't track smart money from the long-term people, because long-term people, they are very shy people. They don't express themselves. They don't reveal themselves. They don't reveal their major intentions. There are many times you would have seen that recently, one day before elections, institutions like FIs, they are record short, and now they are flipping to record longs. The reason is they don't show their real intention. Long-term people always, they want to trap the traders before they want to make a main decisions, right? So that's a phenomenon which is there since the flow trading days. Now also it's been happening. Nothing has been changed.
So
So
how
long-term
did you
players.
track that the players are record long now? Is it by structure or is it by looking at the
You can
data?
you can
Yeah.
also track from the couple of web portals there where you can go and track it. Like one of the beautiful visualization where I had seen recently is like this web dot stockage. So they have some very interesting visualization. It's free to access. Like here you can see what retails are doing and what institutions are trying to do in the markets. So if you could see that this is during elections, the orange one is the FIs. This is
Okay.
an index futures. Index futures, they went record short on the
Mhm.
day of election. They even increased their shorts also. But retail
Okay.
traders, they increase their longs. Retails are exactly catching the bottom. But the
Mhm.
problem is like retail traders, they don't have the patience to hold on to their trades. They're not adding up to their winning trades. Instead, they start cutting down their trades. So as the price keeps
Mhm.
moving in, they start cutting down their positions. FIs
Mhm.
are cutting down their positions on their losses. They are accumulating
Mhm.
losses, so they keep on cutting down their positions rapidly. That's a very good technique. And as price keeps moving in, FIs are completely shifting to long, and retails are somehow they are having a lot of fear of heights. Probably
Okay.
their RSI might be getting into overbought. So maybe some bad news is there. Maybe fundamentally they might see like the Warren Buffett indicator. They might be looking into that. That is going above 100. People are talking about the earnings and the other stuff is completely irrelevant to the markets. Markets are getting overheated. So somehow retails are uncomfortable with the heights. So what is
Mhm.
making them to do is like they are now retails are getting record short and FIs has been keep on increasing their longs. They keep on adding up to their longs. So that is one thing
Mhm.
what retail traders are missing here. They are when they're seeing their profits instead of they are adding to their winning games when there is a good opportunity is there. Rather they are cutting down they are taking down their profits or they are booking out with small losses and they are getting out. That is what the major crowd is making a mistake. Otherwise, exactly on that date, FIs went exactly wrong, retail went exactly wrong. But the institution game is not about right or wrong. How I can manage the game better. That's what an
Mhm.
institutional game is all about. They can
Right.
take wrong decisions. Sometimes they purposefully take a wrong decision to trap the somebody because if they want to go long, right, somebody has to
Mhm.
go record short.
Right.
So it's kind of a psychological game. So let's not get too deeper into that because this is
Absolutely.
their game,
Sure.
not our game. My point of view is like it is very few places only you'll be able to spot long-term money. But even if you are able to spot a long-term money, tomorrow's market is going to be completely irrelevant to what you're going to see from the long-term money. That is one of the reasons why there is no point of tracking FIA and DA data. You
Okay.
can track it, but don't try to reflect the trades on the next day because tomorrow there are many times FI kept on selling from January to May, but still many times market was hitting an all-time high. Even during
Right.
elections also, FIs went record short. One day before election, we are at all-time high. Right? So there is no point of tracking. My point here is sometimes yet it works. But if you are a routine trader in the markets or if you want to build a career in the markets, maybe it's okay to watch the information, but don't try to reflect too much on those informations. It will create unwanted bias in the markets. But
Sure.
where is the real smart money, if you ask me, from the traders, from the big traders? That is where the visual references will be very helpful. So I'll
Sure.
quickly move through that.
Right.
So point of control and initial balance and value area. So point of control is the place where we call it as a fair value. That is where more institutions love to accumulate or distribute. Many pro traders also, they want to do more business. So FIs, they love to do more business. DI, they love to do more business. So they always look for a fair place where they can accumulate or distribute more amount of quantity. So the difference between retail traders like us and institution traders is like I might be willing to buy at one level or maybe at two levels or two different levels, but institutional trading will be present throughout the day, right from the morning till the evening. They will be keep on getting funds, so they'll be keep on getting funds from their customers. SIP funds will be coming in. Mutual fund, sometimes money will be coming in. If there is a crisis, there'll be a redemption pressure will be there. Throughout the day, it will be coming in. And throughout the day, the dealer will be keep on buying their stocks. And right now, it has been almost many of the institutional activity has been as long as they keep on getting the money will be kept on parking in the stocks. So based on what the fund manager is deciding on that day, the dealer will be keep on buying throughout the day. They don't have time to watch the technicals, right? So
Right.
long-term money, it keeps coming in. Every second will be keep coming in. But will they move the markets? If you ask me, they don't move the markets majority of the time unless there is some crisis, unless there is some big events, or some special situation. If there is some emergency situation, only then they will show their presence. Otherwise, as I said, they are very conservative people. They don't showcase themselves. And many at times you try to follow the long-term money, particularly on the short side, you may end up getting trapped heavily. So that's the nature of the market itself. So the point of control is the place where you can see those big guns will be accumulating or distributing. And then value area that represents 70% of the TPO with respect to the point of control. And initial balance is the first 1 hour of price action. So these are like kind of macro structures. And the most important thing is one of the important microstructure is the buying tail and selling tail. So the top of the tail is what we call as a selling tail. The top of the tail is what we call as a selling tail because that is where sellers, they control the markets, aggressively selling at the top. They stop the auction and the auction tend to reverse. And the bottom of the tail, you can see a lot of single letters. We also call that as a single prints. So we call this as a single prints. So wherever you see only horizontally, if I able to see the structure, you're able to see only one single letter. Maybe I'll zoom and show you so that you can able to see it very clearly. So if you could see that there is like only letter D is there if I measure horizontally. So here if I measure, I'm able to see only one distribution over here. Here if we could see three distributions here. If you could see at the center, I'm able to see almost 10 times of distribution over here. So where 10 times, that is where the point of control is coming in. Point of control. And the tail zones at the extremes is what we call as a buying tail at the bottom because price keeps on dropping down at D period. Price is able to pull back and it creates a lot of single prints that shows more aggressive it is, more aggressive the players are controlling the markets. Many at times it involves smart money. I would say like 70% of the time it involves the presence of the smart money over here. It may be acting like an immediate support zone or immediate resistance zone. If it is happening at the bottom, it could be acting like a support zone. If it is happening at the top, it could be acting like a major resistance zones. One classical example is like I would like to spot from Bank Nifty. I also written recently article some 2 days back also why that zone could be acting like a resistance. So for tails, we cannot just like that. We cannot ignore it. So if you could see the tails, something very interesting, you can always note it down. Majority of the times, your tail will be very small. You can see the tails are very, very small here. Sometimes the tail could be a little lengthier, but you see that the other side, the tails are always smaller, small tails. Here also small tails at the top, small tails at the bottom. Now, this is what you'll be seeing 70% of the time. 70% of the time, you are not going to see the big tails at all. Sometimes looks like market might be looking like crashing down at the opening. So many people, what they will do, they'll try to go short in the markets, but it'll create a lot of single print tails, right? It create a lot of single print tails. Then what happens is like market will pull back maybe at the B period. End of the day, if you would have seen, there won't be any tails at all. Only very few cases, few instances, it creates a bigger tails. So one such day is where the 12th of July, it was creating one of the bigger tail. So that's a big selling tail. There's a big selling tail over here. And this tail zone, you can see that many times the buyers are aggressively trying to enter into the markets. Buyers are trying to push the price, but what they're getting is like they're getting a rejection. So we are getting a rejection over here. So price again getting back into that. Again, we are seeing a rejection. So third time also they are trying to enter into the zone. They are trying to break this zone. So what we are seeing is like continuously we are seeing something called responsive sellers. So responsive sellers means buyers are putting an attempt, but sellers are giving a counter attack is what they are trying to give. So the price is getting defended. And this is very important because you don't see this kind of tails very often, maybe in a month, maybe 1 or 2 times, or maximum 3 times. If you are seeing such kind of big tails, that itself a big deal, right? So you don't get to see this on a day-to-day basis. On a day-to-day basis, as I said, you'll be seeing a very small tails most of the time. And that itself are intraday nuances.
So if I were to see in a very layman terms, that might mean that there is a enough buyer's interest which is pushing the price, and at the same time there are sellers who are waiting to immediately shut the selling down. So
Yes.
this
Some
time,
strong sellers. So buyers
strong
are
sellers.
trying really hard, but they're not able to get through that. But sellers are really stronger than the buyers here. That's one of the
So
reasons why we get a strong tails. We also call that as an excess from the market
right.
profile perspective. So
And
excess
for
is
excess, we should have at least two TPUs, right?
uh, even a small tails are nothing but excess, right?
Right,
So
right.
even the small tails here, even here, if you could see, it is like 4 TPOs I'm seeing over here. That is also an excess only. It's a good
Right.
excess, but a strong excess is what it matters. So
Right.
here we don't have an excess at all. That's why it becomes like a poor low or poor
Poor.
high. That is lack of excess. And this is kind of a very strong excess where it shut down the complete activity. If you would have seen the activity was like, if you would have seen the intraday activity, if you would have felt that the market was moving casually, C period went heavily and D period went heavily. So faster they went up and faster the shutdown happens. So here, that's what we call as a tempo here, fast. The fast price action where you are seeing, that is where you'll be able to spot a momentum traders, where price is moving literally faster. Since the morning, if you would have tracked the intraday activity was like it was keep on sleeping, going, something like that, slightly bullish. But suddenly the market wakes up and suddenly it picks up fast, and even more it went fast. Faster the price went up and faster the shutdown happens. Right. So if you see the tempo here, the tempo was slow on that day on 12th of July. And then later on it picked up speed. So the speed is where the momentum traders, they love to play, but unfortunately, majority of the time, the momentum traders, they get trapped in the markets. Very few instances, probably I would say like 25 to 30%, they succeed. But momentum traders, many a times they get trapped at such kind of locations. One such kind of location, some strong seller presence has been witnessed. End of the day, we would have seen that strong tails has been left in the markets. So that can be a positional information for you going forward. So that zone, if at all prices again coming into that zone, it could be a very, very strong zone because the strong seller who entered over here, they might try to defend that zone. As long as it is not getting crossed, these traders will be coming and continuously keep on defending such kind of zones. So these are
So
like kind of a
this
very micro informations.
So this type of information is very useful for option sellers. Like they can sell a
It can
strike
be useful
above
for
this.
option buyers. It can be useful for option sellers, positional traders, intraday traders. So different information has different meaning. Some informations are useful for intraday traders. Some informations are useful for positional option buyers. Some information could be useful for option sellers also, right? So particularly directional traders, they can make benefit out of this.
Absolutely.
It doesn't matter whether they are option buyers or option sellers.
Very interesting.
So how we can, well, I mean, what we can do with market profile is like I generally separate market profile into two categories: macro structures and micro structures. So Jim called this as like visual nuances. That's what Jim call this. But over a period of time, I also accumulated my own learnings. So I have my own way of classification. Even though my core principles are based upon Jim Dalton, I also derived my own way of observing the markets. So I classify the markets into macro structures and micro structures. Macro structures are like profile structure, short-term references, which is mostly useful from a positional point of view. Whereas micro structures and visual references and intraday nuances, mostly if I'm a trader, intraday trader, or I want to hold a position for 1 or 2 days or 3 days. So those kind of short-term information I want immediate resistance. I want immediate support zone, that kind of things. That's what I'm saying, like the smart money in my time frame. In my time frame where I see this level as a support for the next 2 days or 3 days, because I'm a trader, I'm not an investor, right? So I'm not going to hold my position for like 1 month or 2 months or 3 months. So majority of the traders who are trading in F&O, in futures and options, their holding period is like hardly 1 or 2 days or 3 days or 4 days. So they'll be looking for a very quick short-term information. They want price to move in their favor. That's what every trader's intention is. So that is why I shifted my focus of smart money not to track the long-term investors, because as I said, long-term investors, they don't showcase themselves. They are really smart in hiding their information, very difficult to spot from the publicly available information. But there are places where you can sense the presence of the smart money from the short-term traders. There are some short-term traders. Short-term traders means they can be big traders, ultra HNI funds, prop trading desk, family offices. They are also smart money. They are also doing business. The business is like they are doing business for decades, right? Maybe you and me here for like 5 years, 10 years. They are there for decades. Their family as their business, they are doing it. Primarily in Mumbai and Gujarat, many people's family business itself, they are into trading, right? So those are the people I'm talking about. Those who those who have the muscle power to move the markets intraday, but still it is very easy to track them using market profile. So some of the examples I'll try to spot. So before that, we'll get some very basics on macro structures. So this is one of the simple macro structure. We call this normal distribution. So distribution looks like a traditional bell curve, whereas this is normal variation day, where one side distribution happens, other side you'll be seeing a skew. So a traditional normal distribution will be looking like this, a traditional bell curve shape curve. Whereas in a normal variation day, one side skew will be there, other side will be seeing a distribution. So that is how the normal variation day will be looking like. So means morning it balances, and second half it builds momentum and it keeps going in one direction. So that is normal variation day. Normal day could be like we have a center point, price keep on oscillating around the center point. That is normal distribution day. It provides and still it trends. It has a trending structure. So something like price moves up, goes sideways, and it keeps going up. So that is normal day. Still, it develops a structure in the center point. A lot of time price touches. So mostly price action will be in the first half an hour. In the last half an hour, you can see that. Still, price will be trendier, but it creates mid of the day mostly sideways. And then we have another interesting structure called neutral day. So neutral day is like kind of a doji kind of structure where price will be trading around the center point, but it will be chopping around the traders heavily. So it goes up, fails, goes down, fails, and comes back and closes in the center. That's what we call as a neutral day center. Most likely indecision from the trade people. And then we have another 3 set of activity here. So this is like an long-term traders activity. As I said, very few cases, very few instances you'll be able to track a long-term activity. At trend day, cleanly, the long-term players are taking control of the market. As I said, they don't take control of the markets. They trade, slowly accumulate, slowly distribute. But one of the day you're seeing like long-term players, they might have some information that we don't have, or sometimes they even act on the public information as well, like election day, budget days. So these are the days the volumes will be extraordinary, and you'll be seeing huge volume activity. Volume activity will be heavy from long-term players. Volume activity will be heavy from pro traders, short-term traders, intraday traders. Everybody will be doing their volume left and right center. They'll be doing their volume. But long-term players, they move the markets. Rest of the people, they have to follow. If they fail to follow, the damage will be heavy on such kind of days. This is where you'll be seeing like entire sectors will be moving in the same direction. Whenever you're seeing that entire sector is moving in the same direction, Nifty is up by 1% or 2%. Almost all the other sectors are green. Every other sectors are green except India VIX. So those are the days you are seeing strong money flow is coming from the long term. When money is flowing heavily from the long term people, it will be flowing across the sectors. It will not be going into one particular instrument. It will be glowing. It will be flooding across all the sectors, right? Likewise on the downside also. And the other one is like double distribution day. Here also, some sort of news happens during mid of the day. Suddenly, a balancing market breaks up, and then it started balancing at the top. It creates a single print in between the structure, right? You can see that usually single print you'll be able to find at the tails, but here you can
Right.
see the single print at the midpoint. So usually, again, a sign of some long-term activity. But I'll say again, if you track the long-term activity, tomorrow also will it follow? If you ask me, not necessarily. Some cases
No.
it follow, many cases it never followed at all. So tracking the long term alone, it doesn't make big difference if you're a trader, it doesn't make a difference. Maybe if you're an investor, maybe you might find it interesting. But as a trader, I never got excited because of long-term activity. Yes, long-term activity, if you are trading in that direction, you may end up making a big money. But will it continue tomorrow also? Not necessarily, right? So today
Okay.
they might dominate. Tomorrow they may not dominate. Tomorrow somebody else will take control of the market. Again, long-term will go quiet. And that is what they do majority of the time, right? So if you are
Sure.
spotting today long term, doesn't mean like tomorrow also the long term has to follow. That you once you start observing, you will get to that point. Initially, it will be very exciting to see long term activity, but over a period of time, short term players is where you should start tracking, because that is where the intelligence is there 75% of the time, and you're also able to spot the weaker hands 25% of the time using market profile. So that is with macro structures. But when it comes to visual structures, micro visual structures, there are many places where you'll be able to see the presence of smart money and dumb money, because they play something called exactness, exactly around previous day high, previous day low, multi-day high, multi-day low, poor highs, poor lows, prominent point of control, single print zones, buying and selling tails, rally high, pullback lows, gaps, early morning high, early morning low, intra-bar weaker high, weaker low, previous day high, half back and intra-bar half back, today's open, yesterday settlement close, midday point of control. So now you can see that there are a lot of informations are there, like a lot
It's
of.
amazing that so much of microvisual structures can provide us so much of information. It will be good to see on charts how we identify this.
Yeah, unfortunately, right, nobody
Sure.
had documented yet. I hear that Jim Dalton is writing a book on visual reference levels.
Wow.
Maybe I think that could be his upcoming book. I'm not sure whether when it will be released. I think I heard in one of his session he said like he'll be releasing a book on visual reference levels, because
Okay.
most of his learning are right now in his videos, but it
Right.
never translated in book. And we have a very, unless only Jim Dalton is the only one who is talking about visual reference level. You cannot find anywhere in the books or textbooks. Only you can find in his videos. You can see most of the times. So those are my core inspiration to took the learnings, and then I developed my own style of skills, and then so
Absolutely.
some of them we'll talk about that. They're
Sure.
nothing but derivative works of on top of the what Jim Dalton had done, which is already there in the publicly available information. It's not something I had invented new. But there are some places, yes, I also had my own style of observation. So where I classify which is smart money, which is strong money, based upon my almost last 12, 13 years, I've been observing market profile. So based on that, I have some certain set of ideas, what I consider that as a smart money, what I consider that as a weaker hands.
Sure. So let's see these visual structures on. Yeah, absolutely.
Yeah.
Please.
So first thing first, when you want to understand the visual structure, you have to consider using something called optimal TPO size. So that is one of the biggest drawback where you cannot use the web-based tools. Recently, there are Go Charting and TradingView provides market profile kind of tools. Even in Ami Broker, we have market profile kind of tools. The problem is like it is not optimal. You cannot run an optimal TPOs where you need a smaller TPO size, not too smaller, not too bigger. But in TradingView or Go Charting kind of platforms, the problem is like I have to use bigger TPOs. It's very difficult to reduce the TPO size. So I finally got settled down to NinjaTrader, right? So I've been using NinjaTrader since 2015 onwards. So since then, I've been using microstructures only. Earlier, I used to have, when I started, I have Market Delta, but somehow Market Delta got into litigation with their parent company like Investor RT, Linsoft. So I have to migrate to the Market Delta shut down, and then I have to move to NinjaTrader. So since then, I've been using NinjaTrader since 2015 onwards. Otherwise, previously I used to have Market Delta. And talking about microstructures, so you have to have an optimal TPO size. Something like Nifty, I'll be using like this price band of Nifty comes around like 2-point TPO. So every 2 points, I'll be plotting the letters. Something like Bank Nifty, I'll be using like every 5 points, I'll be able to plot the letters, which is very difficult to plot in platforms like TradingView or Go Charting. Maybe you may be forced to use, for Nifty itself, you may forced to use like 5 or 10, where you might be missing the micro nuances. So I'll tell you why it is. Maybe for the first example, we'll go through that. See, the investors, right, they never care about exactness. Only traders play the exactness. And many traders stop loss will be like a day high or plus 5 points, day low plus 7 points. So when yesterday's low got broken down, many traders will get active. That will be the confirmation point for many traders. Many momentum traders, they try to enter in the markets. So always, right, investors, they don't watch yesterday's high and yesterday's low. They don't even care about that. They don't. I even doubt whether they will care about like last 4-day high or last 5-day high. I don't think even they care about last week high or not. Investors, they watch a completely different reference. They watch like 200-day moving average, maybe uh, some bigger information like all-time highs, all-time lows, multi-year high, multi-year low. When a market is hitting an all-time high, right, you can see that the most of the rejoice will be coming from the investors. Investors will be expressing their excitement, and when market is hitting an all-time low, investors will be showing their despair, right? But for traders, it doesn't matter. Even if a market is hitting an all-time high, it doesn't matter. For traders focus on very short-term references. What investors are watching, what traders are watching, is completely two parallel worlds, right? So they don't mix each other. When talking about microstructures, right? So I classify, based upon this visual structure, I classify traders into dominant traders. They are the one actual smart money. And momentum traders, they have a particular habit of chasing the price action, but many times they end up getting into a trap. But sometimes 30% of the times they are smarter, but 70% of the time they end up getting into a trap. So that is why you have to track where the dominant traders activity is happening, where the momentum traders activity is happening. Very few instances only you can go and trade in the direction of the momentum traders, particularly when strong trends are evolving. You know that it is going to be a strong trend, and you see momentum trader, you have to learn to chase the breakouts. But majority of the time, we have to where the momentum traders are entering, at times it could be a trap. And then we have weaker hand traders. So mostly they're emotional traders. Their trading location is mostly at a very last moment. They come to the party and then they'll join it. So we call them as laggards. Many a times they get into a trap because of their emotional decisions in the markets. And via market profile, yes, we can able to classify where the weaker hands are, where the dominant traders are, where the momentum traders are. By looking itself, we'll be able to classify. So why visual structures are useful, I'll tell you. So because visual structures, they do carry memory. It has a memory point. Maybe I'll try to give some examples later on. It helps traders to position intraday as well as positional trade setups. It helps them to decide and helps traders in identify immediate resistance, immediate support zone. So think about it. I'm not talking about long-term support or long-term resistance. I'm talking about the support for next 2 days, the resistance for next 2-3 days, or maybe resistance for next 5 days, support for next 10 days. So I'm talking in terms of days. I'm not even talking about this could be the resistance for next 1 month or 5 months. I'm not talking about that. That is like investor time frame. One investor should have to take care about those things. As a trader, I should look for immediate resistance, immediate support zones. So that is where we'll be able to spot from the profile structure. The best example is like last Friday's Nifty future example. So maybe I'll, instead of showing here, I'll show directly in the chart itself. You'll get a feel what exactly a visual reference level is all about and why it is so important. So this is like what the picture, what you're seeing here is the last Friday's activity. Market heavily went down, and Thursday activity, market went heavily up. So if you ask me where the visual reference levels are, I have to zoom to the charts to the core. I'll just scroll up, right? You can see that. So this is like last Friday high, this 18th, 19th July high, and this is like 18th July high. If I try to draw a line here, so I'm just simply drawing a horizontal line here. That's what we call as a references. Every reference carry different importance. So this reference is something very interesting. Maybe by looking itself, you know that what really happened. Maybe I'll write a narrate for the people who are first timers to the market profile. This is my previous day high, Thursday high, basically. Thursday high. Now market open at the bottom, straight to the point. It comes exactly to the yesterday's high. Faster. The action was pretty much faster. Faster they come up, faster they go down. Right? So some sort of strong money presence has been there, and their presence has been very much exactly visual to a TPOs, exactly to a TPO. Last Friday high TPO and Thursday high TPO are exactly same, sometimes exactly same, one TPO above or below. Still, we call that as an exactness. So even if it goes one TPO above also, still we'll call that as an exactness. Now, whenever you are seeing like fast up move followed by a fast down move, that is where the dominant sellers, they will take control of the markets, dominant sellers. So when you're seeing this itself, it's an indication that it is a intraday opportunity as well as a positional opportunity. They are creating an immediate resistance. Intraday also, they're creating an immediate resistance. Maybe they might be creating a resistance positionally also. So that they are creating some sort of a immediate resistance. So who is initiating here? They are not traders, they are not investors, they're not some big investors. Ideally, they are traders, because traders are the one, they visually, they take exact trades. Somebody is coming and exactly stopping the trade exactly at previous day high, right? So at a TPO level, maybe if you watch at a candlestick level, maybe this could be like 2, 4, maybe 8, 4, 1, and maybe this could be like 2, 4, 8, 4, 2.5 something. Right. So there'll be some marginal difference will be there. But if you see at a TPO level, that exactness, you can feel it. And intraday itself will be able to sense that yes, some sort of dominant trading activity is happening. Maybe that is what I'm saying. Like more you are having an experience, morning itself, you know that first half an hour, you know that this looks like some sort of a dominant activity. Faster the price rise and faster the drop is happening. So that observation is what it classifies you as a professional trader. That is where it tells them, hey, boss, this is looking like a dominant trading activity. And maybe I think we should be shorting the markets intraday as well as positional as well. So something
just
like that.
one thing over here, perhaps poor high, which is lack of excess, is also an indication that the sellers were active on the previous day, Rajandran?
Yes, I'll come to that point. That is what I'm going to talk about next.
Okay.
So this is one visual nuances. Likewise, there will be multiple visual nuances you'll be able to understand. So maybe I'll show you the second interesting one. So this is like a poor high at an all-time high. This is a structure that you can see from Reliance. So I show the actual Reliance chart itself here. I'll show you how visual it is and why traders, smart traders, are taking control of the markets, not investors. Remember, as I said, investors, you don't see their smartness on a day-to-day basis. They don't show their smartness. On a daily basis, investors not necessarily have to show their smartness, because every day they get money. Why they have to be smart every day, right? So, but there are certain places they know where to be smarter. They might lose small battles, but when they are winning, they'll be winning a bigger battle. I think probably you would have seen that there is a movie called Enigma. They do the exact same thing there. So even though they decode the enemy's encoding tactics, right? So Still, they lose small battles, but they still win the bigger battles over here. So if in case we haven't seen the Enigma movie, just go and watch it. Fantastic.
This is the one in which German coding, they broke the...
Yes. Right. The machine name is called, the
Enigma.
decoding is called Enigma.
Right.
So this is with Nifty. I'll go to Reliance. So Reliance, you can see like this is like kind of a poor high. Poor high is nothing but lack of excess. If you could see here, whenever I'm seeing lack of tails, right? Lack of tails, I call this as poor high. So there's no tail over here, or maybe I'll be getting only one TPO at the tails. So maybe for this kind of structure right here, I'm using 2-point TPO. 2-point TPO. Every letter is 2-point bricks over here. Maybe if you are using like 5-point TPO, 10-point TPO, every day will be looking like a poor high, poor lows, because tails are normally smaller. But here I'm talking at a precision of 2-point TPO precision I'm talking about over here. The G period high and H period high are a 2 TPO difference. So that minute information is what I call as a micro information. That says this is happening at an all-time high. A poor high happening is something very casual. Poor high happens. Generally, next day itself, what happens is like it will get cleared. But if it is not getting cleared, that is what it happening. Same day it haven't cleared. Next day on 9th July, this is 9th July. 9th July also it failed to clear. So the next day, if it failed to clear this level, it becomes like a positional resistance to me. I call this as a dominant selling. So same day I will not call it, but I'll take a stance one day later. I'll call this as a dominant seller, or we can say like immediate resistance. So we call this like dominant seller. And again, you can see like there is one more poor high we are getting over here. So there is lack of excess, no tails over here. And next day, again, it failed to clear. There has been an attempt, but attempt has been failed. So 12th July, again, I'm going to upgrade to another dominant seller. So one more dominant sellers are taking control over here. Initially, I have a resistance 1, immediate resistance. Now my immediate resistance is shifting from here to my second resistance. This is going to be my immediate resistance, right? So it creates series of resistance at times. Maybe if you had watched recently for the stocks like HDFC Bank, you can appreciate what I'm trying to say here. But these are the, I carry forward these levels. They're not my targets, but they are my immediate resistance. So I use this as an immediate resistance, right? So since then, it gives an opportunity, a very good trade location to short the markets positionally, something like that. So, and moreover, whenever a poor high is happening at an all-time high, we call that as a kind of a situation called as inventory getting long to too long, kind of an overheated situation from the short-term community. So we call this situation as like inventory goes long to too long, long to too long.
And you have a very nice article on market calls about inventory long to too long and firecracker effect.
Yes. So whatever I have any thought process, I used to write and blog about it. I've been doing this since 2006 onwards. So market profile also I had, to some extent, I had whatever comes to my mind, I had shared my experience in my blog. So maybe for the beginners, they may have to learn more context, right? So that's what I'm saying. Like there are a lot of nuances are there. It cannot be compressed in a day, 1 or 2. So that is why you need to have some continuous practice over there. So this is with Reliance, and that is how the price got stopped. Generally, poor high happening at an all-time high is super rare, but a poor high coming and the next day it is not clearing. That's a dangerous information for the short-term players who are holding longs. Those who are holding long, they should consider exiting their position. They might plan for a re-entry maybe, or those who want to short, it's a perfect location to short because now you have a clear-cut resistance coming in. And over a period of time, you are seeing more and more information that your resistance also keep on getting upgraded. You are seeing more and more weaker buyers are coming and trading in the markets. More dominant sellers, the big guys, the big traders are coming and defending their positions in the markets. Right? This is one classical example. Another classical example is from HDFC Bank. You can see like series of poor highs. You can see. So this is from poor high, and next day it never cleared and it becomes like a resistance. So we had a poor high here. We had a poor high. So PH. Same day, I will not confirm that as a smart money or smart money selling. Next day, I need one more day to confirm. Next day, it failed to clear. So this becomes my resistance. And then, so here you can see that there's a poor high. Next day, it got cleared. So that is nothing to me. So I just have to cross that information. It doesn't make any sense to me. So poor high comes, many places it clears. So that is the nature of the market itself. But here, if you could see, there is another poor high. Next day, it failed to clear. So my R1 is now upgrading to R2 here.
Nice.
And again, my R2 is getting upgraded to R3 over here because last Friday also price started getting back down. So I'm able to trail my resistance. So now I don't consider this as a major resistance. I don't consider this as a major resistance. This is my immediate resistance over here.
And
Right?
also the results are not very good. So it will be interesting how SDFC opens on Monday.
It doesn't matter. We don't focus on what is the result. There are many instances, result came really bad and market went higher. There are many instances like one of the day, Bharat Forge, I think they said like 96% they had the profit got eroded. But still that particular day, the stock went like 16% or 14%. This is somewhere in 2017, I believe. 2017 or 14, somewhere in that time, where they given a positive guidance, but their revenue wise, it's like complete disaster. But they given some hope to the investors. So investors taken it very seriously. They done some value investment on that particular day. So it's very difficult to read. Yes, of course, there are many places wherever it is going to be like surprising results. Definitely, market will have a trending direction. But many instances, trying to decode a fundamental information on a day-to-day basis, I doubt a trader should not do that. Maybe investor should do that. A trader should not do that at all, right? So a trader should focus more on the short-term information. A trader should definitely aware about the information, but they should not reflect whether the particular news is bullish or bearish, right? So what is more important is like once the news is released, so what kind of traders are coming and competing? That is what it is very important. Or before the news, what kind of traders are coming and competing? That is what it is primarily important from a trading perspective. Trying to decode a news and trying to expect because of that news only market will would have been went up means after election that day we had a 5% crash. FIs has been record short. Nobody would have been anticipated like next week we'd be hitting an all-time high. So within a week or 2 weeks, we are at all-time high back again. Right? So market changes very faster. So as a trader, we should learn to adjust our sales. Market goes up, we have to learn to trade the upside direction. Goes down, we have to trade the downside direction. Sometimes within a same day itself, market will be keep on moving up and down the same day multiple times. So you should have the mental flexibility to shift your sales within a day itself. You may have to shift multiple times. Very difficult, but that is where the challenge is all about, right? That is
So
why
on poor
markets are so
high,
fast.
there's a interesting question also that there are multiple highs and they are becoming more and more visual. At what information change will you start to consider this resistance as potential targets?
See, there are certain information. Poor highs are never my targets in many instances. But there are certain places like the one which happened in Nifty. It's creating a temporary top, but it's not a major top. So something like Nifty, is it a smart money? If you ask me, yes, it is a smart money. That smart money, right? They can bring down the price action maybe another 2 days or 3 days also. They can go down. Sometimes they can go down like for 10 days also. But no matter what, they always pull back. We don't know how, when they pull back, we don't know immediately. We cannot comment on that. But when the market is started moving down, some places traders will get into a trap. Some places traders market may get into sometimes overheated emotions. So different time market does something different, but always there is some underlying pattern will be associated with that. You'll be able to judge where the market is getting weaker. So maybe I'll try to show some lively examples where last time there was a trap has been set for the sellers. So sellers market has been last 2 months, right? It's been keep going bad. So I'll go to the markets here. So there are various ways a trap can be set in the markets. In fact, I have some 7 to 8 classifications how a trap could be set in the markets. So this is one thing called liquidation breakout failure. It's more of a positional trap. So if you could see that particular day's structure here. So it's not from market profile perspective, but just a simple price action. Even if you track the market profile also, you might get a similar feeling. So price has been slowly moving up, right? So one of the day, right, what happened is like a strong volume, strong downside move. Generally, strong volume means big sellers. That is what majority of the people think. A strong volume also, many times it indicates some profit booking. That's it, right? So many instances in a strong bull markets, suddenly a market is crashing means it is majority of the time, if you look into the profile structure doesn't indicate not much of a serious selling. It says like kind of a trapped activity. So many sellers, as I said, many people's watch this swing low, right? So whoever watch that swing low, when the price goes down, they are not able to control their shorts. They get flowing their shorts. Even if the price rises, the retail traders find it very attractive to short more and more, right? So that is how they fall prey to that information. But this is kind of a trap, I would say that. So this is kind of a liquidation breakout failure. This liquidation is nothing but a simple profit booking. Profit booking. How do I know that? If you ask me, I've been watching every day, almost every day. I've been watching Nifty and Bank Nifty. So I've been classifying this kind of simple patterns. So why such kind of big volumes are happening? I do have observation on order flow as well. Uh, how exactly the volume went on that particular day. So I do watch during the live market hours while I'm trading, right? So market profile and order flow. So those are the places when there is a strong profit booking is happening. Generally, once profit booking is happening, inventory goes to neutral. Sometimes inventory goes extreme, overheated markets. It got little cool down, but very quickly it will start getting back up. That is how the inventories are in a strong bull markets. Strong bull markets, what market will do is like they will keep going up. Sudden crashes, many weaker hands, they will come and short the markets, but very quickly they'll get back up. And strong corrections again, they'll keep moving up slowly. And then once the market makes a top, major inventory getting long to too long, and then that is where you'll start seeing major corrections where other internals, market internals also showing a lot of weakness. Open interest, you may get some clues there. So a lot of other information says like market profile indicates some sort of top patterns, inventory getting long to too long. Many things will be coming in sync. That is where the major top is. So right now in Nifty, if you ask me, is it a major top? If you ask me, it is going to be a temporary correction. Maybe this temporary correction maybe can continue for 2 days or maybe till budget. I don't know. But whenever the things are changing, one thing I can tell you that it is not a major top. We'll be hitting an all-time high. But smart money is coming and selling. They are just temporary sellers. They will sell at some point in time. They will book profit. They will move away. Even they will switch to long also sometimes. That is what short-term players they play. They always change their opinions very frequently. But right now they are shorting. Means we also have to go in their similar direction. We don't know how long they will be moving. They could be moving for next 2 days, next 5 days, but they are very short-term traders. At some point in time, when situation is getting overheated or more and more weaker hands are coming and selling, market might reverse. When it reverses, this kind of exact visual reference level, which I see this as a memory, market keeps a memory around that level, market will again come back to the same level, maybe this week or maybe this, I don't know whether this week will happen or not. Maybe next month or maybe next week, somewhere around that time, this level, you can see like market will be hitting one more all-time high. So it's not a major top. That I can tell you that from my
Very
experience.
interesting. Budget is on Tuesday, so there would be activity around and following that. Actually.
Yes.
Yeah.
And likewise, there is another smart money like AB poor low. You can see that it's the letter which is made because of letter A and B, which is also a poor low. So here there was a poor low. Next day it is getting cleared. Nothing serious over there. There's also a small poor low here. Poor low and poor low, double weaker lows. It's also a poor low. This is a special poor low where letter A and B, it can go up to 2 DPO difference, right? So this is special poor low. We call that as an AB poor low. An AB poor low, if it is happening and its next day it is not getting cleared, in many instances, not every case, because different ways, different places, we treat AB poor laws differently. But this one place, markets, it's creating a short-term immediate support zone. It is getting created. One of the good location to look for a positional long trading
Long.
opportunity with this AB Poirot as an important support zone. So
So
this
this
happened to me.
again, you will take a call on the following day, not the same day. You will
Next day,
wait
not
to
the
see.
same day, not the same day.
Right.
Next day, maybe sometimes you will be getting a feel in the morning itself. Morning itself,
Mm-hmm.
price will be hitting an yesterday's high. So the chances of price again coming and testing the next day, same day low is very lesser, because not every other day is going to be an outside day. So morning itself, sometimes you get a clue. Yes, the chances are reducing. Sometimes you may have to wait till mid of the day. Sometimes you may have to wait till 3:15 next day, 3:20
Okay.
sometimes. And then you can take a decision. So still you're seeing that the poor low is not cleared, poor high is not cleared. Then majority of the time it confirms that it's going to be a strong support zone or
Sure.
strong resistance zones.
So
Along with that, we also, yeah.
just following up here, we have a poor low, let's say, and we also have, let's say, a good excess on the bottom. Which of between these two cases, which will give you a more confidence about the upward trade if you want to take?
See, we always have to learn to see the information as a collective information. So if you could
Okay.
see here, right, I can see this as an, so this letter A and letter F, it is only one TPO difference. So here I'm
Right.
talking about 50 paise TPO. The difference between each and every letter is like a 50 paise.
Mm-hmm.
So this is like kind of a smart money. That itself a smart money. It's creating a support zone, which is getting confirmed on the 5th of July itself. And there is also an AB Poirot which says like the opportunity could be even more bigger. So here it says
Okay.
like there is an opportunity, but the 5th of July, the information AB Poirot, generally in a sideways market, you are seeing an AB Poirot, and that market AB Poirot is not getting cleared next day, right? So next day it generally it clears, but if it is not getting cleared, you know that the opportunity could be slightly bigger. It could be a slightly a bigger positional opportunity. Right. So
Yeah.
one thing you have to understand that not every opportunity is equal. There are certain very few instances only in market profile you'll be able to see bigger opportunities. Majority of them, it will point to the micro visual information. And that's not the same thing here. If you could see the structure here again, I can spot like how crowded the traders are getting played over here. So notice this
Mm-hmm.
10th July low and 11th July low. How precisely
Yeah.
maybe I'll try to explain this with a diagram so that you'll get a fair idea what I'm trying to exactly talk over here. So that is one of the day we are having a low, right? So what is happening here is like price action perspective, price is coming and going just one exactly D period, exactly coming to the 10th July low.
Mm-hmm.
This is 10th July low. And then price going up. Again, it went down only one TPO lower, that is E period. Again, buyers are pushing up. Again, at F period, it went one TPO down, again pushing up. Again, G period exactly coming and defending. So multiple times the level is getting defended exactly at the same place. And it is also creating not only an poor low, but it is also a dominant reference it is creating, and price is moving to the opposite side. So these are like very powerful support zones. A super powerful support zone. Maybe this could be targets later on, but immediately if you speak, whether it's an weaker hands or not, definitely these are like signatures of stronger hands, right? So if you see this kind of tiny informations, definitely over a period of time you'll be able to recognize. It requires a practice. Maybe I would say like if you're practicing 3 months,
Absolutely.
definitely you
Absolutely.
come to one shape, one form of understanding. But more the experience you're going to have, better your clarity in thinking will emerge over a period of time. So only thing is like you should not, if you're a learner, you should not look for a short-term gains. You should look
Mm-hmm.
for a long-term learnings. Over a period of time only you will be able to grab this concept, because this is something completely different. So where we are talking about the real smart money, real traps, how the traps are repeatedly set in the markets, repeated patterns you're going to see. Every other day, market will be doing something different. But within
Right.
that something different, market will be doing something visual always, majority of the times, right? So that you're going to see that.
So in
And
market profile, synthesis of the market generated information is very important. What sense you make out of all the information which is coming is very contextual and depending
yes.
on the context of the market action.
Yes, so using these tiny nuances only we'll be able to understand the context, underlying sentiment, who is driving smarter, who is weaker. If it is weaker, where they are keeping their stop loss, right? So where they're getting trapped. If it is a weaker hands, why? How do I visually say that these guys are traps? So by looking into the market profile itself, how I can say that these are traps, these are stronger money, these are long-term money, these are smart money, these are like momentum traders. They may end up
Right.
getting trapped. So these are momentum traders. They are going strong by looking into the structure. So it's always not only visual structure alone. Visual structure combined with macro structures definitely give you a broader idea about how to trade any kind of market situation and any kind of trading instrument. It could be Nifty, Bank Nifty today. Tomorrow it could be HDFC Bank, ICC Bank, Reliance, or something like that. Or even tomorrow it could be gold, crude, US markets, Australian markets. It could be any markets. The thing here is, even if you go there in gold, or even if you go and see in US market, even uh, compared to Indian markets, even US market is even more visual.
Right.
Which you can see it in most of Jim Dalton's videos, how visual it is. So I try to explain from my point of view. You just go and watch Jim Dalton's video. You will get ample amount of ideas how visual the markets are, how visual traders they take
Actually, I had a
decisions.
question here, Rajandran, because I trade ES now, and what I have seen is, for example, ES has a range of 50 to 80 points, and they have a 4 point, means 1 point is 4 ticks. So in
Yes,
a way, they have a range of not more than 200 to 300 ticks in a day.
yes,
Whereas Bank Nifty, which trades 500 points, it has a tick of 0.05.
yes,
So in a sense, Bank Nifty is trading 10,000 ticks in a day. So
yes.
means
Still, market
I
goes visual. You want to show like
exactly. That's the point, that market goes visual despite, means from 300 ticks in ES to 10,000 ticks in Bank Nifty, and still we are able to generate very meaningful information. That's amazing.
so maybe I'll show you last Friday what happened. This is called as uh, early morning high, early morning low. It's not a Jim Dalton's concept, but I very frequently observe the first half an hour high, that is letter A period high and letter A period low, is what I called as an early morning high, because it happens when the market just started. It's an early morning high and early morning low to me. I just marked down the last Friday early morning high. This is letter A period high. I call this an early morning high. And this is like early morning low. This is within the day I'm showing you. So it's not just only at the major highs and major lows. Within the highs and lows also, you'll be able to find many visual nuances. So this is, I just marked over here. Now, if you could see that the letter A and D period, the difference is like only 1 TPO over here. So there you can see visual information. And you can also see that the letter E, F, G, H, I, and J, there is something very interesting which is happening over here. Notice that this is E period. E and F, 1 TPO difference. F and G,
Right.
1 TPO difference. G and I, 1 TPO difference. G and J, 1 TPO difference. So more crowded selling is what it is happening in this location, right? So multiple times the selling is happening. It's a kind of an area of importance. Maybe 1 or 2 days
Yeah.
we can carry forward this information. These are like very tiny nuances where it is happening at a 5 point difference. So since you are
Right.
saying like last Friday, Bank Nifty was able to move like 510 points from the high to low. The high to
Mhm.
low range was like 510 points. Sometimes it could be even 1,500 points also. But market never failed to show this kind of surprising nuances from the market profile. The only thing is like you should learn to observe the market profile very closer.
Absolutely. Absolutely. Very interesting.
Yeah.
Please go ahead.
And exactly how this kind of information could be useful, I'll tell you. That is what exactly happened on Thursday in Nifty also. So if you could go and see the Thursday's Nifty profile, this is Thursday, right? So Thursday, what you would have seen is like market went one-sided, but still, if you would have seen the early morning high, which is the letter A period high. So maybe for the beginners, I'll just zoom even more and then I'll show you. This is letter A period high. Let me split the profile structure so that you'll get a fair idea. I'm just splitting the profile here. And I'm also circling the letter A period high. This is early morning high, which is nothing but letter A period high. And look at that G period. So G period went only 1 TPO into the early morning high and it started going up.
Amazing.
From there, it started going up. Now, these kind of nuances usually returns back. This has a very short-term memory. Usually the 70% of the time, the very next day, it comes back and clears the reference. Means it comes back and touches that reference exactly. Uh, this odds are like 70%, something like that.
Right.
You can see this kind of nuances very repeatedly in Nifty, Bank Nifty, stocks. These are like micro informations within the structures. You'll be able to see that many places, like the one which I showed you in Bank Nifty, where multiple letters are getting traded. That is also like kind of intra-bar, intra-profile structure nuances. Nuances means nothing like very small micro information, but it gives a meaningful edge in the markets. That's what Jim Dalton called it as nuances. So nuances is a term which is coined by, like, I mean, it's already there in sports everywhere, but particularly in trading, Jim Dalton, if he's saying nuances, means he's talking about some strong visual information. It has some underlying meaning towards that. So here I see this, even though intraday they are smart, but positionally these levels are meant to be returned back, which I had seen that price
So I think
returns
this
back
point
numerous amount of times.
answers some of the questions where people were asking for what sort of reference we use for intraday trades. This is a good example of like monitoring the early morning high and low
See, early morning high, low and high is one single
based
point.
on that.
As I said, I had given complete classification on that. Every other day, we will be always hitting some sort of nuances that tells us what kind of context which is running. So, but let me be very honest. You're not going to get that on the day one itself. So it requires. That's why it requires a little repeated practice. So these are the list of nuances I do follow. I might miss out one or two, but I think most of the things are here.
And Rajandran, if you could share that screenshot of that size of TPO, I could share it in the community because people were interested to understand.
Yeah, so here.
People can take screenshot over here, please. Thank you. Okay. Yeah, please go ahead.
Screenshot.
Yeah.
It doesn't matter. It's already available in the public internet. It's already available. YouTube.
Okay.
So we've been using this since for quite some time now, more than now 8+ years we've been using this.
Okay. Although we are closing in near the time, but it's interesting. Let's keep going, Rajendran ji. We still have good audience continuing with us. Very happy to hear from you and learn from you.
Okay. See, the point here is, even if you're going to learn these kind of short-term information, many places, it's going to make your life easier. But as I said, still markets are many places unpredictable. Like this information alone, it is not enough. What if you're a new trader, you can focus on these tiny nuances, you can interpret support and resistance, but many places we will be seeing a combinations of information, right? Same information, at times I have to react positively, same information but different location, right? I have to react negatively. I'll give you one example. So I'll talk about an AB poor high and AB poor low, right? So this is maybe this could help you to understand same information, how we have to take different opinions, different different thinking. That kind of approach you may have to take it in the markets many at times, because same information, right? It never gonna work the same way, but different location you have to take different different meaning towards it. For example, let's say if I am seeing an good uptrend, a good uptrend I'm seeing, and then suddenly I'm seeing and one of the AB poor low, I'm just seeing, let's say one of the day I'm just seeing an kind of an AB, letter A and B is exactly same, AB poor low, and price is hitting an all-time high or fresh swing highs. I don't see this AB poor low. This is an AB poor low to me. AB poor low to me. I don't see this as an immediate support. Rather, I'll see this as a risk in the market. It's a tremendous risk. I call this as inventory getting long to too long, because the location is, it's happening very close to all-time high. So then the very next day itself, we will classify this as a dangerous information. It's kind of an overheated markets. Inventory getting long to too long, getting long to too long over here. Right. So whereas the context, like in case of in case of not in a strong trending markets, but sometimes you'll be seeing an AB poor low in a sideways market. Sometimes you'll be seeing an uptrend, then market goes into a sideways. When market goes sideways, so one fine day you'll be creating an AB poor low. It creates AB poor low, and then start going up. So this next day it doesn't clears, it failed to clear. So it becomes like an important support for me This is going to be an immediate support. The information is same. Here also AB power low. Here also AB power low. But here I see this as a risk on longs. I see this as an risk on longs. Right? This just is what it takes time for traders to understand. This nuances is what very,
This
very
is
important.
amazing.
How I see market profile, I'll tell you. So since I am from the automation background, right? So I always love to play with the visual rules here. The context here is even though it's not a plain vanilla rule. So how I can say here. So ideally, in market profile, there is one context that the location matters. The location of the information,
Absolutely.
where it is occurring, it matters. So there are many places RSI had went overbought, but many instances, despite RSI overbought, still price keeps going higher.
Absolutely.
So it's not the same opportunity every time, same pattern, but different opportunities, different times. The context here is what kind of information is happening. That is what we have to observe closer. So I'll try to show you an example how HDFC Bank topped out. So HDFC Bank.
But this is an amazing insight, actually. I really love this part, actually. That same reference, but how the location can change the complete interpretation and the market response to it, actually.
Yes, yes. So that is where you need time to spend, analyze, spend some time, classify. So if you see machine learning, right? So recently a lot of buzz is happening on machine learning. I exactly see market profile as kind of a machine learning, because machine learning is really, initially it was good in identifying which is cat, which is dog, which is good, which is bad, which is small, which is big. So that is what machine learning initially it was classifying back in 2012 is where we got that image recognition system. There's something called AlexNet. So that is where so the guy named Elias Schwarzenegger. So he's the one who is the master brain behind ChatGPT. Now he left ChatGPT, but he was a master brain. He's the first guy to train a massive artificial intelligence model to classify which is good, which is bad. Same sort of, my point here is same sort of classification we have to do in not only in market profile, it could be anything. Maybe you are a price action trader, you could be an order flow trader, maybe you could be an Elliott wave trader, or you might be using Fibonacci or some other techniques. The point is same. Over a period of time, you should identify which is a stronger one, which is a weaker one. Right? So same like a machine learning, how the machine classifies. You as a human, we should also learn to classify. Let's say if it is a head and shoulder pattern, which is a stronger head and shoulder pattern, which is a weaker head and shoulder pattern. How I can judge that which is a stronger one, which is a weaker one. That is where you should spend the most of your energy. That is where you can become unique. And that is what it is more important to sustain in this crooked markets for a longer term.
Absolutely. Absolutely.
Right. So we'll take questions before showing another example on HDFC Bank. So this is like HDFC Bank. You can see here, right? The poor highs, poor lows coming in next day getting cleared. So that is what it happens. Poor low again, it's getting cleared. So there's no meaning towards that, right? So I just simply ignore it, because that is what it happens majority of the time. But some places you will be seeing this AB poor low. That is what I'm seeing over. You see this? There is an AB poor low here. So this is an AB poor low. This is an AB poor low. Same day, HDFC Bank was hitting an all-time high. And next day, there was a news is getting announced that I'm sure you might know what kind of news it is. There has been a news got announced that FI contribution had came down. So MSCI rebalancing is going to happen. Closely, some $4.2 billion of inflow is anticipated in this coming July. Right? So when this information is happening, at the end it is happening. But is it a publicly available information? Is it the first time they are announcing this news? If you ask me, of course it is not. The news has been already there. Macquarie, some time back, they said that they are anticipating somewhere around $4 billion to $5 billion. Before election, there was an announcement came in. I think the article also published in Money Control also, but nobody cared on that because everybody was busy in election. There was a highly sensitive news is coming in. but nobody cared. Particularly small players, they never heard about that. They never cared about that also, because many people, they don't have any fair idea about what an MSCA rebalancing is all about. But the news was happening on 31st. 31st is where many companies, they said like they are expecting $3.2 billion, like Jeffries, Macquarie Bank, these kind of big guys already came up with an estimation even before, right? But election day, everybody's focus went on price action elections. And then since then, it kept on going up. And finally, the news was out. The news was out saying that the actual inflow, what they're anticipating is like $4.2 billion. But that's not the key here. News can happen anytime, anytime, every time it can behave differently. But the point here is at what point the news is happening. So the point where news is happening here is like AB poor low. Next day it is not getting cleared. It was happening at a major swing high. So that is a signature that an inventory getting long to too long, right? So long to too long. And that is how the market is also getting topped out. The very next day, we had some dual momentum pattern. Something similar pattern is what happening in Bank Nifty also. I also recently, some 2-3 days back, written an article about what is a dual momentum. That is how the dual momentum top is getting confirmed. Some sort of a strong top is getting confirmed there. One of the target was like towards a AB poor low. So AB poor low, I think 2 days, the AB poor low got a clearance and price started crashing down. Everybody was in a surprise. So it was like $4.2 billion of inflow, but why the market are aggressively selling down? So, but if you see the structure, underlying structure here, right? The structure was like AB power low at a major swing high. But the same AB power low I show in Axis Bank, it's not the same context here. It's not the same location. If you could see the location here, Axis Bank went sideways for quite some time now.
Right.
And even if I compress, you can see that it's been keep on going sideways, went up, going sideways, went up, going sideways. This is not an trending market. And further, it started correcting. In that sideways phase, we are getting an AB power low. These are like very good, interesting data points, right? And then, so where exactly happening? So again, a lot of sideways price action, and then we are getting this AB power low, right? So we are getting an AB power low and one more visual low. Within that visual low, there are multiple weaker lows, right? So more and more base supports are getting extended. So these are add-on confirmation that the support is getting upgraded. This AB power law is going to be even more a better trading opportunity. Uh, and slowly the context is unfolding. It's not like day one, next day itself, it is not unfolding. It's taking like time. Still, it's taking like 3-4 days of time to test. Still, they are trying to test the lows, AB power low. They are not able to approach the AB power lows, and slowly it is materializing on the long side, right? So, but still, fundamentally speaking, it had done with that. Now, if you could see that there is an AB power high, and now we are seeing the selling pressure. And you can see that the selling exactly happened from a midline, which is also called as a halfback, another visual nuances. Price is rejecting exactly from the halfback. So some dominant sellers are again trying to sell. There is one more dominant sellers at AB power high. So two back-to-back dominant sellers is what it's coming up.
Actually, how we combine these micro visual references is also interesting, and it all comes from screen time and practice.
Definitely, it is required.
Yeah. Excellent. Can we move to questions? There are some questions over here, Rajandran.
Yes,
If you are finished with the basics.
We are almost done with the basics.
Okay.
But I'm sure within that limited time, I could have
absolutely. It's fantastic, actually. Because in fact, just the concept that the same references, but the location, how it changes, has been the learning and the high point for me, actually. So thank you so much for this very interesting presentation.
But that is not only limited to market profile, that is applicable to almost every other trading
strategy. Absolutely. So would we go through questions
we
now?
will go through questions one by one. Yes.
So we have somebody asking us that order flows shows all orders executed in market or some portion. I think it is only the market orders, right?
Market, so all the orders, it shows that only executed orders. So all the executed orders will be shown. In US, they have something called dark pools, whereas in Indian markets, we don't have dark pools. So all the orders will be, whatever the orders got executed, let it be institutional orders, FII, DI orders, everybody orders executed, it will be reflecting as an actual volume, and the order flow will capture it, whether it's a buying side or selling side. It captures
Have you
clearly.
used Bookmap and seen is there a how
I
is
had
it
done a couple
compared?
of sessions for Bookmap also, though
Okay.
it's already there in the YouTube.
And how do you see it as compared to order flow?
Right
Like
now, bookmap in Indian market is like kind of naive stage, right? Because bookmap requires level 3 data. So right now,
Mhm.
Indian markets, brokers are providing only level 2 data. Some brokers like Zerodha and 5paisa, they are offering level 3 data, but level 3 data is very costly for a data vendor. That's one of the
Mhm.
reason bookmap team, they are right now limiting only to level 2 data, where you will get up to like 5 levels of bid and ask.
Yeah, yeah, correct.
That my view is like as of now, level 3 data is what it makes bookmap unique. Level 2, you
Mhm.
can learn to some extent only, but you will not get the complete picture about the markets.
And what sort of accuracy you see when you're looking at market flow and order flow combined? And is there a risk reward
The
ratio
accuracy
when you
doesn't
look?
matter. So from market profile and order flow, what matters is like your risk reward ratio only. So even if like 4 5 trades, it is hitting with a stop loss, and one trade, you're gonna make that, accuracy doesn't matters.
Okay. So is the risk
So maybe
reward you
if you're
manage?
having a reasonable accuracy, anything more than 50%, with very good risk reward ratio, that is more than fine.
In fact,
Sometimes,
the
see, I'll tell you, I would like to point
Mhm.
out this accuracy. That's a most, I would say, like most overrated thing. The reason is
Mhm.
your accuracy is not going to be consistent every month. Every month, market is going to go do something different. Some month you'll be getting 80% accuracy. Will I get the same accuracy next month? Can I get a guaranteed 80% accuracy? No. Sometimes it could be like 40% also. Sometimes you might be 3 months in a row, you might be able to achieve 75% accuracy. Fourth month, will I get the same accuracy? No. Sometimes it may go to 25% also. Fourth month, you're doing your accuracy going down doesn't mean like you're doing bad, right? That means like markets are even more harder. Maybe market might be kind next month. So every month your accuracy changes. Every week the accuracy changes. It's a distribution. It's not a number.
And how do you see market profile and point and figure charts? Is there any sort of a similarity, difference? How do you see it?
I do used point and figure long time back, but it also has its own rules. But I never seen this much deeper information in any other tool, not only point and figure, any other tool. I gone through like Iliad waves. I gone through like the regular Fibonacci, Ichimoku. You name any tool, I would have gone through that, right? Including Bookmap. And the the point here is, when talking about market profile, the market generated information, the amount of nuances, the amount of visual information that I'm getting, that gives me the
Mhm.
context, which I haven't seen in any other tool, which can give me that much amount of information from a trading perspective. So majority of the tools, they talk about from an investment perspective, different time frames we can track. Even the smart money, we'll be able to track at a higher time frame. We will usually will get to know if Ramesh Damani is buying something or some big guns are buying something. Same day, media channels will be projecting it. So it's a public information, right? But still, the context remains the same thing, that will they are they smart money in my own time frame? There are many times Warren Buffett bought, and then same day Apple stock got crashed, 2%,
Mhm.
3%, many days, same day it got crashed. But if you see in the long term, still Warren Buffett was winning in his own time frame. But is he
Absolutely.
a smart money from an intraday perspective? Absolutely no.
And since we're talking about the references you get, there is also you use volume profile. And do you use always with the market profile, and how do you use it with the conjunction and what
Somehow my eyes has
inform?
been tuned only to market profile. Volume
Okay.
profile, I don't even look into that. Even though it shows me volume profile, I don't have the habit of watching volume profile, because volume profile also gives context. I'm not denying that. But more than that, I had seen tremendous amount of visual reference level. Visual reference level, there's nothing to talk about visual reference level in volume profile. Maybe sometimes you can see that price will be coming and touching exactly the HVN, but that will be like out of 10 days, maybe one day it will be hitting. But if you look into the market profile, Maybe sometimes in a day itself, you'll be able to spot some 3 to 4, 5 times visual information. You'll be able to track. Positionally, you'll be able to track many visual nuances. Last 2 days, you'll be able to track a couple of visual nuances. Last 5 days, you'll be seeing
Okay.
more visual nuances. So you'll be able to build better context in market profile compared to volume profile.
Okay.
I'm not saying like
Yes.
you should not watch volume profile. My point is
Absolutely.
volume profile provides minimal information, whereas maximum information, more important context, you'll be able to achieve by monitoring the market
Hmm.
profile charts.
Uh, Following up here, like there are, it's just synthesis of few questions. People are asking that, is there a way to not identify, but understand if the coming day might be a balancing day or a trending day? Is there a sort of a context which can indicate of a balance versus continuation, balance versus trending?
Again, I would like to point to Jim's context only. So what Jim
Okay.
says, like whenever, let's say, like whenever the one time framing is getting broken immediately, let's say letter A is going up, B is going up, C is going up, and D is breaking down faster, the chances of balancing market, where it is breaking, it is likely to balance a lot. So there
Okay.
is one more dimension that we focus something called market confidence. So again, that's another ocean. So faster the one time framing is getting broken, more chances of sideways market is going to be there. So let's say like A was like this, B is going like this, and B period is breaking down faster by C period itself. So chances of price, this point of thing could be a point of control with a very high odds. So you can expect market to go down, again, come back to the center point, maybe go up, come back to the center point. So that kind of swings you can anticipate. Or
Okay.
sometimes market might go down, come back up, again goes down, come back up, again goes down, come back up. It's still the point of control will be kind of acting like a kind of a magnet. That is how
Mhm.
the price distribution happens.
Okay. Very interesting. Mm, there are lots of fan of one of your old friend, Mr. Vikas Malik. They are saying hello. He's
Uh,
also known as Didi. He is also a great trader and he shares his insights.
okay.
So our hello from
Yeah.
his fan base over here.
Hi, hi.
Of course, Rajandran knows him very well, so there's no point asking whether he knows or not. But a big hello from him,
Yeah, sure.
from his old fan base. Um, and how do you see POC in comparison to VWAP? Because many people are used to using VWAP, and how do you see that with the POC?
So I think more or less where the VWAP is. VWAP I also use in order flow. I use heavily VWAP a lot. Not in market profile, but VWAPs on a 5 minute time frame. When it comes to VWAP, if I know that if it's going to be a sideways market, definitely my eyes also will be there on top of VWAP. Particularly in the sideways markets, VWAP is one point I always look for as a potential intraday target. If in case if there is any scalping opportunity, VWAP could be one of the important target points for me. Because
Okay.
in a strong trending markets, let's say this is going to be the VWAP. So in a strong trending market, the price action will be not touching the price action. It will be keep
Mhm.
more or
Going
less.
on. Yeah,
You would have seen that in
you're
a
right.
sideways market. That is what generally majority of the time it happens. So let's say this is my VWAP, and the price goes up. Sometimes it does some exhaustion, and it always return back to the VWAP levels. That you can
Since
see
we
it
talked,
many times.
since we talked about practicing, is there a way to backtest or replay the TPOs in Ninja Trader? Can you replay the information?
Absolutely, you can do
Okay.
a replay. Maybe I'll show you the replay of last Friday's price action.
I think since we are running out of time, let's go through question, and in the end, if we have
Okay.
time, we will.
But in my many of my YouTube videos, I had done the bar
Okay.
replays in many of my. You can just go back and watch those videos.
And Rajendra, many people are asking, this is a very interesting introduction, and if they want to learn deeper about it, what is the way?
See,
Like,
I'll tell you one thing here. This is I've been watching many people. I've been taught many people also. Initially, they show curiosity, but over a period of time, they are not able to digest that too much of information is there. This is not for me. I doubt this will be working. That kind of at some point in time, people are somehow they are feeling the frustration. At the same
yes,
frustration where we feel it in the gym.
right.
Exact same feeling. So I there are certain ways if you are learning market profile, you have to follow. As I said, it's going to be dedicated practice, right? So no matter what, the you should not stop the practice because a lot of new information you have to learn Maybe if you are already about 30 years old, 40 years old, people don't want to learn new things. Even if they want to learn new things, they'll keep forgetting uh, the new things very faster. When I started, right, my age was like approximately, I think 2012, right? So back then I was like approximately some 30 years old, I think. So back then, within a month, I was looking into that. I don't even know what is an open drive, open test drive is all about. So I used to keep forgetting. Again, I have to learn new. Again, I'll be get caught up with my regular activities. Again, I had to forget. Again, I had to start fresh. It was a kind of a frustration initially, but that frustration phase, you have to cross through that so that you have to get that plasticity. You have to remember things, you have to understand things, because when you're looking into the information, suddenly you look at it, there is a poor high, so that's a dominant resistance. So this is the place where momentum trading is there. So you have to learn to classify things. So different day, you have to classify the same information differently. And as I said, that is to some extent, it is like I will not say like it's difficult. It requires strong practice. So yeah.
And how do you learn it systematically? Because it's a deep ocean. Is there a sort of a program which takes it from step by step hand holding or trading or doing it live? What are the ways in which people
No,
who are
no.
potential?
You're talking about market profile?
Yeah, market profile.
So I'm not getting learned that everything in one chart itself. Over a period of time only we are able to classify things. So
Sure.
initially, I there are times I spend time like how a market top out from market profile. So over a period of time, we started seeing patterns, right? So it's not like it doesn't happen on day one itself. Maybe sometimes it would have taken like 5 years, sometimes it would have taken like 7 years. Because of that repeated places where a particular place, a market is able to make a top. Uh,
Mhm.
Now we are able to identify, hey, this is how a market tops out, this is how a market bottoms out, right? So there's
Mhm.
something called dual momentum. Recently we had seen this kind of top. I also discussed some 2-3 days back, I think. So this is like kind of a dual momentum top. We call that as a dual momentum top. It's a kind of a price action combination which we apply on top of. It's not a price action, regular price action technique. It's a price action that we watch on top of market profile, right? So it's not the supply demand or something like that. So one of the, oops, I'm sorry, it's like this Bank Nifty. So this is one of the pattern that we watch. You can see that it's called as dual momentum. The point here
Mhm.
is it is happening at an all-time high, letter A period. It tops out, makes an higher high, and the subsequent day again lower high. It also tops at letter A period, and that zone I just marked that as a zone here. And I see this as a major resistance. This is the exact same top happened in HDFC Bank, and
Okay.
there are similar top happened in many banking stocks also, right? So even
Mhm.
Bank Nifty also, it had made similar top. I also done some brief explanation about what is a dual momentum top, why it is so important. I also written some article over here. This is like I returned something like some 5 years back. I returned this article. It's exactly the same setup over here. Dual momentum, how it works, how these are like one of the way I see this pattern. Likewise, I had classified 25 different types of how a market tops out, right? So over a period of time, what we learned is like we classify things. So like machine learning.
Absolutely.
Yeah, so,
And in when you use market profile, do you use it on future or you use it on spot charts?
so I use market profile on only on futures, because in futures is where the real traders they trade in the market. The big traders mostly they trade in futures only, right?
Mhm.
So index nobody trades, right? Only index stocks only they trade. So if I'm a Nifty trader, I should watch only Nifty. If I'm a Bank Nifty trader, I should watch only Bank Nifty to
So,
understand what is happening.
but how do you manage the gap or the difference when the contract rollover happens? Because the rollover is
I
usually 100.
always see something like stocks. I'll be always using continuous contract because stocks are illiquid.
That is
Uh,
fine. Yeah. But what about
so,
index like
but when it comes to
Nifty or
index,
Bank?
I always use July contract. You see that, so that I'll not be seeing the gaps at all. So if you
Okay.
see only Nifty and Bank Nifty, only in market profile only, I use monthly contracts.
Okay.
Even in trading, you can see that monthly contract, continuous contract, those kind of things are there. But when it comes to stocks, it's okay. I can manage
No,
with.
but in index charts, let's say when you will go from July to August, let's
Yeah,
say
I'll move to August contract.
but the premiums, the difference is almost 300 points. All the old references, they are, they become different. So how do
Yeah,
you carry forward the information?
it will become different. So we always adapt to the new information.
Okay. So
So once
whatever
expiry is done,
references are
we'll forget
there.
the old
Okay.
nuances. We'll adapt to the new
Oh,
nuances.
so there is no carry forward of old references.
Some important things we'll carry forward, like AB power
Okay.
low, RP POC. These are like very major references. We have to carry forward. Rest everything I'll ignore it.
So you will carry forward it at the old price, or you will add up the gap and then shift it
See,
up
many
or
times
down.
the same nuances will be present in the, since it is Nifty, Bank Nifty, highly liquid, whatever happened in the same thing will be available in
Oh,
the next
okay.
next contract also. But
Okay.
sometimes it could be different. Sometimes the nuances will not be there in the current contract, but next contract will be there. So we have to give importance.
I
But
think
if
this is the
something sensitive
most,
like AB power high, AB
yeah.
power lows, RP power kind of major support zone, major resistance, we may have to carry forward.
So Surya has asked the most interesting question. He is asking, how do you catch hero zero trades by using market profile?
You should not do that. So there are many times you have to learn to trade small, many times, right? Many times you have to trade kind of 1:1 kind of risk reward ratio.
Mhm.
So the moment you started looking into zero hero trades or always looking for a zero, I mean, hero trades kind of setup, then you should not get into trading at all.
Okay.
Because trading,
Uh,
if you're a daily trader, there are not every day market is going to give you a bigger opportunity. Sometimes you may have to
Absolutely.
trade smaller opportunities, particularly in a low volatile environment. The opportunities will be very much compressed. You're not going to get the similar returns. Your returns will be very
Absolutely.
much diminished. But when markets are getting super overheated, like kind of election days, kind of places where market will be bouncing back and forth, like big
Mhm.
movements will be there, VIX will be blooming like anything, your opportunities will get bigger at the same time your risk also gets bigger. When reward is getting bigger, that means your risk is also getting
Absolutely.
bigger.
Absolutely.
So that
So,
is, we cannot stop that.
so last few questions, Rajandran. Sachin is asking, do you have, or is it possible to create a screener to look at stocks or which have a trending day or a double distribution day?
See, one of the thing what beginners should stop staying away is like what kind of day it is, whether it's a double distribution day, trend day, or there are very few places. Today's structure will play a major role on tomorrow's structure, right? So yes, some places like double distribution, yes, it is important. P-shape profile, it is important. Is there any scanner? Is there? If you ask me, nobody had created one because it is not that easy to create also. So
Mhm.
yeah, if at all, if it is there, I am the first one to create that. So it is difficult from at my level. It is still, I feel it is like little difficult. Some people they try to achieve. There's a guy called 50charts.in. So he provide
Mhm.
charts for market profile, I think. To some extent, he had done some basic scanners, but yes, it's a very basic scanner.
But in case of a double
Even in Bell
distribution
TPO also, they
day,
had done a bunch of
yeah.
scanners like poor high, poor low scanners,
Mhm.
failed auction scanners. So some unique scanners they built, but still they are like it's okay. First timers they can, for them it will be useful. But if you are a day-to-day trader, on a daily basis, if you are watching the information, you don't need scanners at all. Like hardly, I don't look into the entire universe of Nifty. I'll be mostly trading Nifty, Bank Nifty, or maybe bunch of 10 high heavyweight stocks like Reliance,
But in
ICICI.
fact, when we use Bell TPO, there is a way to mark the singles. And by
Yes.
quick glance across, 20, 30, 50 liquid stocks, it is easy to spot if there are. Uh,
You can scan in Bell TPO. They
yeah.
have
And is there, what sort of importance do you give to single prints within the chart, within a stock actually, if there is in the middle of the distribution? So it's a double distribution which is split evenly. How do you see that?
see, when you're seeing in single print zone, you cannot ignore it because many places we apply the concept called acceptance rejection.
Mhm.
So again, acceptance we again classify as stronger acceptance, weaker acceptance. Stronger the
Mhm.
acceptance, major the trend changes are. Weaker the acceptance, it could be a trap. So maybe
Okay,
I'll try to give an example here
sure.
so that you get a fair idea what kind of classification we had arrived over a period of time. So, so majorly these days we do only classification part. We learn something, but out of that we try to classify which is good, which is bad, which is stronger, which is weaker. So ideally, end of the day, you'll be finding that context only.
Okay.
So I'll give an example like. in terms of acceptance, in terms of rejection, so that you get a fair idea how we treat single print zones.
Absolutely.
So imagine I'm having a double distribution here. So this is like case one. So we have two distributions, the bottom distribution one, top distribution two, separated by a strong single print zone. Let's say this is a single print zone here. Single print zone. So let's say previous day price went higher, and typically the single print zones are likely to act like in a strong trends. The single print zones are going to act like a major support zones. That means many times you can see that price will be getting dipped down below that. Immediately you'll be seeing a responsive buying. So buyers will be taking control of the price action, and you'll be seeing like point of control will be building above that. That is signatures of a good trend evolving in the markets. They're not major trend change. They are like kind of mostly a trap for the sellers. They're mostly a trap. And this is one particular example. Likewise, you can keep on spotting examples over here. Like another classification you can do like and strong acceptance. If it's a strong acceptance, you can see right from the start, you'll be seeing a clean change in trend. For example, same context, but different price action. So for example, let's say I'm having a double distribution here, same distribution, same case. Here also market went up. Here also I have the single print zones. Here also I have the single print zones here. I have this SP zone. SP means single print zones. So like single letters, maybe like G and G and G. Horizontally, if you monitor, you'll be having only one TPOs.
Right.
But let's say if at all, right from the open, sometimes you'll see like price goes down. Right from the start, you'll be seeing and witnessing a high confidence price action. So this is kind of a strong acceptance. We call this like strong acceptance. It could be a major trend change. This could be a major positional trend change. If you're seeing that, it's a major positional shorting opportunity in this kind of markets. So strong acceptance means there's a good change in trend. That's what we call as a change in trend. You'll be seeing like value area will be building lower compared to yesterday's value area. Right from the start, market will be closing down. Strong negative closing will be there. So all the context will be saying that it's completely bearish. And there's one more classification which says like it's an acceptance, but it's not a stronger acceptance. So for example, let's say I'm having a third scenario where I'm having a double distribution here. And I'm having an kind of a similar single print zones, an SP zone, right? This kind of single print zones here, but price is accepting down. Morning, if you would have seen that, it looks like crazy price action. Oh my God, the market is crashing down. But end of the day, it comes back up, right? So maybe it settles down. Still value area will be lower. Still price will be closing negative, but not strong closing negative. So many a times this turns out to be a trap in many instances. So we call this like weaker acceptance. Acceptance is there, value down, price close negative, but still, is it a strong closing? If you ask me, it's not a strong closing.
Absolutely.
So first half,
Fantastic
we feel
example.
like, oh my God, the market is crashing down. But second half, market doesn't do anything. Our market got into a balance. And even sometimes market even closes positive also. But if you look into the value area would have been went completely lower, but not a strong closing. So those kind of things, we classify that as a weaker acceptance. Mostly a trap. And next day onwards, maybe price opens higher. Still it drops, but still it keeps going higher. So that kind of trap is what generally it makes people to go crazy. People, even though sometimes they take a best of the best decision because of the price action, right? Next day they will lose hope and then they will give up on that next day downtrend. Somehow they assume that it's gonna be a downtrend and they'll close it down, and that is how strong money they take control over the players.
Actually,
So
these are the nuances which really keep market profile so exciting and so, engaging to learn more and more about this actually. Because there is just unlimited context and you are only limited by your own sort of imagination and ability to synthesize the information, which you can put to practice actually. It's amazing. Thanks a lot, Rajandran.
Sure. So any more questions that we have?
Yeah, just a couple of more questions remaining.
We can go with that.
Let's quickly go through it. If you have weak money on both sides, up and down, then which side do you think would be clear? What sort of information would you see to respond to this?
So that is what we call this. There are many times you're going to see this complex information. That's what Jim
Mhm.
Dalton does something called chunking. So there's a process
Okay.
called chunking. Chunking is like there are many times you'll be seeing an AB poor high on the top, also poor low on the bottom. Also sometimes you'll be seeing a
Mhm.
poor high also will be there, poor low on also will be there on the same day. So which side I should take a trade. So that is where we take one step back, and then we'll always try to do chunking. Chunking means it's a process that a complex piece of information, you break it down into smaller pieces,
Mhm.
and I'll be waiting for one side to break out so that the other side I'll make it as like a dominant support or
Dominant.
dominant
Okay.
resistance. So
And just
that is
follow up on this.
that's what I call as a
Is
dual dilemma, which
right.
means you'll be having weaker information on both the sides.
Both the
That
sides.
if you are a market profile player, very frequently you're going to encounter such kind of
Mhm.
both the sides weaker information is there. So which side I have to trade? That is a place you have to follow the Jim Dalton's principle chunking.
Chunking.
Yeah.
And is there a way market profile can help us understand which stocks are getting into consolidation or accumulation or distribution?
See, I don't
Is
think market profile at a broader level will not talk about accumulation and distribution, even though
Mhm.
because of the accumulation and distribution, we get the value area, but we don't talk about
Right.
accumulation and distribution at an investor level. So that is like an
Mhm.
investor should worry about that. A trader should not worry about accumulation, distribution, or a markup phase or a markdown
Mhm.
phase. That is more of an investor's information. There are certain things which are investors' information. There are things which are traders' information. So we should not confuse both.
So Vishist is asking, do you take into account IV because many people trade options and beyond market profile, IV, is that something which you
Only
monitor?
one instance we look into IB, like when there is there's a concept called IB breakout failure, or like failed auction. That's the only place we give importance to IB. Otherwise, I don't watch IB on a day-to-day basis. Even in Jim Dalton's also, you can't even hear a single word that
Of IV.
IB is monitoring.
And
IB is
for
a very
one of
legacy concept which was
absolutely,
working during flow trading days, during the flow trading days, right?
yeah, right, right.
So it was working because people back in those days, first 1 hour is mostly dominated by the intraday traders. So they are the
Mhm.
first one to make the move always. So they are the first 1 hour. Always the intraday crowd will be taking a trades. But now I think the intraday traders are present every time. Long-term players
Absolutely.
also present across the day. So back then they have a context called like dumb money opens the market at the start and the smart money closes at the last. That's what the context back then. But now because of the technology, right, that thin line has been
Absolutely.
gone now. So now anybody can trade, come and trade anytime. So
Yeah,
long-term players can come and trade throughout the day. Obviously, their presence is going to be throughout the day.
absolutely.
And even intraday traders, you can find within traders itself, they say like I trade only from 9 to 10. Some people they say like I only trade only in the last 1 hour. So they play only straddle, strangle or something like that. So now we are technologically enabled. You don't need to go to a floor. Back then you have to go to a floor. You have to physically
Absolutely.
sit there and then you have to take a trade. It was a different set of behavior.
So
Now that
while we
behavior has
have
been
many
changed.
questions, I will keep the last three.
Yeah.
One is, while we talk about Jim Dalton, have you referred to Peter Stratemeyer's book at any point of time? And there is a reference of clock in Peter Stratemeyer's book on SOM's structure of market. Uh, what do you think about that concept, in case you have gone through it?
No, I haven't gone through Peter Mayer's book.
Okay,
Initially, some of the concept, like they have something called minus development. Some few concepts I went through that, but not in a very detailed fashion.
okay. How do you monitor for continuation using the market profile?
So as I said, you should start monitoring the continuous market generated information. So
Mhm.
the same day, which is looking like a support, very quickly it can change into a resistance. For example, today I'm getting a poor high.
Mhm.
Next day it is not getting cleared.
Okay.
Subsequent day, it will create a poor low. Again, it will create a support zone and market will start bouncing back. So I cannot hold on to the same views here. So I have to shift
Okay.
my view because the information is changing here. That is how we monitor the development.
So in
Sometimes
fact,
sometimes you cannot
some
rigidly hold on to the view. Sometimes you have to change.
absolutely, absolutely. Uh, One question was about using the intrinsic volatility. Market profile looks at the structure, but do you use IV or the intrinsic volatility? Because many people trade options.
Yes. Do I use IV? Yes, I do look into that. Not on a day-to-day
Okay.
basis, but when the week is starting or when there is some
Okay.
news announcement is there, when there is an earning season is there, I do look into the IVs.
Okay.
But I don't look IVs on an intraday perspective. I don't look into that. Maybe
Okay.
what is the number 13, 14, 15? What number it is? That I'm very much
Just
aware about that.
okay.
Because
Okay.
when IVs are moving crazily higher, we may have to adopt the strategy. We cannot play the directional strategy. Maybe sometimes
Mhm.
we may have to go into conservative mode because option premiums will be heavy. That basic knowledge,
Absolutely.
definitely one should have that. But
But
that
no.
is not a
Okay.
strategy. That is
Okay.
a part of the game. When IVs are
Mhm.
different, you have to have a different approach.
So basically, you look at the traffic and then determine what speed you want to drive your car, actually.
Yes, yes.
Okay. Last question.
Or maybe we should say like which car I should drive.
Yeah, absolutely. People are asking that do you do live sessions or do you teach in any way? Are you based out of Bangalore where people can reach out to you for learning this deeper?
Offline, I don't do that, but
Okay.
live, I do teach. Like I, I do teach. Yes,
Okay. And how do you teach? Like it's a course, so it's a live classes. How do you do that?
it is live classes. Always, I love to talk about the current market situations.
Okay.
Yeah, so
And
it's always live. Every day we spend morning 1 hour and afternoon 1 hour. So morning there will be a different set of market observation. Afternoon
okay.
there will be a different set of market observation. So only
Okay.
one thing that you can expect is like what information I am seeing, what is the
Mhm.
underlying context behind that. That is the one thing that you can always learn. And as I said, market always do something different every other day. But within that, when market is doing something different, within that, how we can extract meaningful information using market profile.
So Rajendra, we are almost 40 minutes above the time, and I would like to just summarize the session by saying, by reflecting what Hema has written, that uh, we can define our trading career split into before market profile and after market profile. And I completely agree that even my thinking and trading has changed a lot. And like Hema says, market profile keeps us continuous learning, which gives us more confidence on market understanding, because the market generated information is something which is unique. And thankfully, algos are not able to catch as much as possible. So that provides us some edge still, actually.
See,
So
I'll tell
Rajendra,
you why there is a strong edges there in the market profile. Major reason is like people look for faster learning and then they want to deploy on day one itself. And that
yeah.
is the only thing which is going to differentiate you from them because majority of the traders, 85%, maybe we can put that number. They look for faster learnings. They want quick learnings. They want to implement from day one, like intraday straddles. So easy to learn, right? So nothing much. So hardly you go in the morning, end of the day, you will get that learning. Next day, you can deploy money and you can start trading with that. That
Mhm.
kind of expertise you cannot get from market profile
Absolutely. Absolutely.
because every 3 months you're gonna get some incremental learnings, right?
Right.
That is
So
what
thank you so
long
much,
term it differentiates.
Rajendran.
Yeah,
On behalf of the entire trading community, thanks a lot.
sure.
And if possible, please do share the PowerPoint so that we can share. Otherwise,
Yeah,
people
yeah.
can look at
I can share
if
it.
you could share it with me, I will then share it across.
Sure, sure.
And,
I'll send you.
and thanks all the viewers for joining us. We will be getting the video and uploading in the next week. Thanks a lot for joining. Rajendran, thanks a lot for making this happen. Much appreciate you taking time.
Thank you. Thank you. Thank you for. It's my pleasure to talk to your community, and thank you for you guys coming and listening patiently, and
Yeah, I
listening
mean,
to
more than
all
100
the
people
golden
are there.
thoughts.
I'm really amazed that, despite 45 minutes, we are stepping over the time and still people are continuing. So
Yeah,
much appreciated. Means that we can understand what sort of engaging session it was and the amount of learning it could. Have a
thank you.
good day ahead, guys. Thanks a lot. Bye, Rajendran.
Thank you, everyone. Thank you.